Hit it.
It's Friday, January 22nd, 2021, episode 115. I'm Patrick Ceresna.
And I'm Kevin Muir. This week, we welcome back to the show fan favorite Lyn Alden. We have a terrific discussion about the macro state of the markets and find out what worries her going forward. Then Zach Resnick from Unbounded Capital joins us to talk about cryptocurrencies and why his firm is focusing on Bitcoin SV. Then in Talking Charts, Patrick drags us through his magical mystery tour of technical analysis.
In This Week in Trading History, we go back to the silver corner of 1980, and then we end with the segments of No Stupid Questions and Skin in the Game. And folks, we might even drink some beers along the way. So stick around. We've got a great show. Lena, hop on. What beer are we drinking this week?
Today we're drinking...
So actually, well, Lena, hello. I didn't mean to step all over you, Lena. So why don't you say hello to everybody?
Hello.
Okay, so I just wanted to jump in here because my good pal Andy sponsored the show for the past couple of weeks. First beer was so-so. The second one we loved. And then a listener of the show, Twitter handle at 50pips, P-I-P-I-S, whatever. He was kind enough to send us and sponsor the show. So what did he send us, Lena?
So we're drinking Duvel Belgian Golden Ale.
Yes. And so I just wanted to give you the big heads up. He said, please don't drink them from the bottle.
we got to be classy with this one.
That's right. And you know what? I actually had to go get a can opener because this is no... I can't actually open it.
No, bottle opener.
Okay. Yeah, and then I have to pour it, so I'll do we'll pour it.
I'll read the little
while I pour it, why don't you tell the people about it?
Duvel is a natural beer with a subtle bitterness, a refined flavor, and a distinctive hop character. The unique brewing process, which takes about 90 days, guarantees a pure character, delicate effervescence, and a pleasant sweet taste of alcohol.
It's like a Euro-dollar contract. Every 90 days they get one. So actually, it's delicious. It's got funny looking bottle.
Yeah.
But it's delicious.
Stubby.
I'm not complaining.
There you go. All right. So, Kev, give us some disclaimers.
Okay, let me jump on. But before I do, I just got to say that I've fallen down. I don't have any side effects, so I need some help from the listeners. So please tweet it out because we've run out of side effects. Okay.
Email us, tweet it, anything.
Whatever you have. In the meantime, nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. Side effects may include running out of side effects because we're too lazy. Let's get to Lyn's first interview with Lyn. It's our pleasure to welcome to the show Lyn Alden. Lyn is a macro strategist extraordinaire, mixing an encyclopedic knowledge of market history and blending it with a deep knowledge and understanding of how the modern financial system operates. It's a pleasure to have you on the show with us today.
Hey, thanks for having me again.
I'm looking forward to it. You brought us a big deck of slides here. Why don't we jump into it? Your first one is the equal weight versus the market weight S&P 500. What are you thinking about?
Yes, I figured I would update this because I covered it a little bit when I was, the first time I was on your show last summer. And so one of the ideas was that we might be getting a bounce in the equal weight version compared to the market weight version. And so far, we have seen somewhat of a bounce there. And so basically this chart just shows that whenever the lines are going up, it means the equal weight version is outperforming the market weight version of the S&P 500. And of course, the opposite is happening when it's down. And normally you see these reversals around recessions, right? Because you get big shifts in fiscal and monetary response. And so what I'm kind of monitoring is to see if that trend continues as it generally does, or if this cycle ends up being different. My overall base case going forward over several years is that I would expect the equal weight version to outperform, but like most things in markets, it's not really guaranteed. So it's a ratio that I continue to monitor for kind of the health of the market.
It's been a terrific call, and not only that, it's been a little surprising because even though we've had the FANGs and the Teslas and all the big name technology stocks that are so much the top of the market capitalization, the equal weight has still managed to put in a respectable showing and actually start gaining on that.
Yeah, a lot of that happened after the vaccine announcement, and so it's been tricky because it's kind of come in bursts, right? So in the summer, during that kind of June peak, we had kind of I call it the Portnoy peak, right? So we had basically all the day traders jumping in, pumping up bankrupt companies and things like that. But then, of course, we got the pullback. A lot of that settled down. But then, starting around November, you started to get an uptick, in a lot of these other kind of value stocks on news of some of these vaccines rolling out. And so it's basically interesting to watch to see how sustainable this trend is.
Now, let's go to your next slide here. It's an interesting global value versus growth. And this isn't just in the U.S. that we've experienced this kind of bid to value. It's all throughout the world.
Yeah, this one's global, but the U.S. chart looks pretty similar because it's the same kind of trends around the world. A lot of it's kind of tied to the same forces like the dollar and monetary and fiscal policy and things like that. And so that kind of value versus growth characteristic is not really different from country to country. But basically, what we're seeing is that that kind of sharp reversal. And again, the big question is whether or not this is another fake out, right? So of course, as you can see on the chart, there have been other fake outs. Now, what makes this one a little bit more compelling is that it's occurring during a recession, right? So normally these kind of growth to value shifts happen during recessions, right? So leading up to the dot-com bubble, you had growth outperforming, became a bubble, and then when that reversed, you had a strong growth in value, but that led to a bubble in the other direction in banking and real estate. And when that popped, it went back the other way towards growth. And now, once again, we're at kind of a divide in the market in terms of valuation where, the top 10% of companies by valuation have such a massive spread over, the bottom 50% or the bottom 20%, bottom 10%, that in many ways it kind of looks more like that, that late 90s, early 2000s period. But of course, history is one of those things where, it can rhyme without necessarily repeating exactly. And so, people shouldn't take it for granted, but it's a ratio that I'm watching pretty closely.
In 99, we had the famous Julian Robertson from Tiger Global Management tapping out and retiring because his value stocks were sucking so much wind compared to all the growth stocks. And he made the low. I keep waiting for the famous 2020 version or 2021. Do you have any contenders in mind?
I'm not sure, yeah, but we have seen, for example, some value fund managers have kind of complained about market conditions, just because it's been a pretty brutal thing for them. And for example, you've seen, ARK, for example, they just took in so much money over the past year, because they're all of their picks just outperformed so much, and then more and more money piled into it. And it's just been an absolutely massive, performance divide.
That is a crazy story. Kathy Wood, all the power to her. She's got a great story that she's telling, and she's attracting a lot of money, though. I know you're way too young to remember 99, but when I see this, it just reminds me so much of the Janus and the Munder Net Fund. It's like you say that history doesn't repeat, but it often rhymes. I think that Kathy is going to end up being the equivalent. What do you think?
I think that's a pretty significant risk. And when I look at the portfolio, I think, there are, for example, earlier in the year, I had some of the same picks. I mean, she was bullish on NVIDIA. I was bullish on NVIDIA. I never was a huge fan of the Tesla position, but obviously that's been one of the best performers of the year. And so, it's hard to complain with price action, but, but I, for example, after I got a big run up in NVIDIA, I went and trimmed it, and then eventually sold it. And so, I do
she
think
probably
that
just doubled down, right? Like she just keeps going. I don't think she sells anything, does she?
she does some trading. That's actually been one of the advantages of their fund is that they do some trading and trimming.
They do.
Yeah.
And so did she sell the NVIDIA? Did she trim that or no?
I haven't checked it recently. I believe it went down as a percentage of her portfolio.
That's just because Tesla's going up so fast.
It could have been, yeah.
Okay, so let's have a look at this next slide. Emerging markets versus the U.S. market. Obviously, the U.S. market gets all the attention, but the emerging markets got a decent bid lately. But on a relative basis, are they still kind of lagging?
Well, in recent months, they've been outperforming. And so the chart on the left here shows U.S. markets compared to emerging markets. So whenever it's going up, whenever it's going up, U.S. stocks are outperforming. And whenever it's going down, it means emerging markets are outperforming. And the reason I did it like that is because if you compare it to the dollar index, it's pretty much the same chart, more or less, where, when you have that kind of stronger dollar period, you generally get a run up in U.S. equities. Emerging markets tend to suffer. they have their dollar debt issue and just kind of a overall slowdown in commodities and just overall commerce, and you have that weaker dollar period, it tends to be good for them. And so one of the big questions is how persistent this kind of down leg in the dollar will be.
And so, what do you think about the U.S. dollar? Are we on the verge? Like a lot of people have highlighted the fact that there's a monster short position out there, and a lot of the dollar bulls have been expecting them to cover, but so far nothing. What say you, and what does that mean for emerging markets?
Well, so yeah, it comes down to managing time frames, and so I keep reiterating that my longer term view continues to be dollar bearish, but trades can get kind of overdone in the near term. And so, for example, last week in my service, I did announce some defensiveness, a little bit of a rotation to defense, just kind of in the near term, because there are some signs of excesses. Kind of the reflation trade has moved pretty far, pretty fast. And one thing I'm really monitoring is what's going to happen this quarter, because there's so much Treasury issuance that's coming out this quarter, and the Fed's kind of buying a set amount of it pretty much. And so I'm kind of curious to see what happens with that liquidity condition. So I don't have a strong conviction on the dollar in the next, say, 3 months or even 6 months. But I think the overall structure still pretends down in the long term.
And so, let's go to this next slide, which is gold versus real rates. A lot of frustrated gold bulls out there. Do they have any signs of hope over the near term?
Yeah, that's why I got a lot of questions about gold investments, and so back in my August newsletter, I kind of outlined some of this that was likely to occur, but it's always kind of probability based, and so what we basically seeing is that as nominal yields are rising, they're keeping up with inflation expectations, and so gold tends to trade inversely correlated with real rates. Now, over the really long term, gold keeps up more or less with the pace of broad money supply creation per capita. But over that trend, it overshoots it and undershoots it, in large part based on real rates. And so this chart just shows in the blue, you have real rates, which is the 10-year Treasury minus inflation break evens, and then the red line is gold. And what we've seen is that gold got a little bit overdone there in the summer of last year, right as real rates started to kind of pick up again because we started to get rising nominal yields from very low levels. And so I think a big question is going to be, how kind of steep is this yield curve going to get going forward, and how much of that's going to be driven by inflation expectations versus the potential for the yield curve control or things like that we touched on in our last talk.
Right. So now I have a theory that gold has been suffering from you Bitcoin bulls. And, when you were on the show last, you told me that you were bullish on it, and I was skeptical, and I was wrong. You were right. You nailed the trade, and you brought us some charts to remind us of the Bitcoin bull market out there. Why don't you walk us through what you're seeing there? And before you start, do you think that gold has suffered because of the Bitcoin buzz?
So that's certainly a narrative that's going around, and that's one of the reasons I kind of monitor this chart is because if I were to see gold deviate from some of the things that it's normally correlated with, right? So people often associate certain correlations with gold, like a popular one is the dollar, right? But the dollar, it kind of comes and goes, as far as the gold's correlation with it. It's not a very strong correlation, whereas gold's correlation with real rates is particularly strong.
Right.
And so, if I were to see gold notably deviate from that trend, more than just kind of a couple weeks here and there, or undershooting a little bit, overshooting a little bit, then I'd start to wonder what might be changing structurally. But because it's pretty much behaving exactly as real interest rates would suggest, I don't see a lot of evidence above the narrative shift. But it certainly could around the margins, right? So
Right.
there certainly could be there's some percentage of investors that might have gone into Bitcoin that might otherwise have gone into gold. And so, for example, the gold correction might have been a little bit shallower if it weren't for Bitcoin. But overall, structurally, I don't see gold doing anything particularly unusual.
Okay, so let's go on to the Bitcoin here. And you brought us something called the Bitcoin supply curves. What are you trying to illustrate with this chart?
Yeah, so this just kind of shows that there is kind of a historical pattern with Bitcoin. And so, of course, the way Bitcoin works is that every approximately 4 years, the number of new Bitcoins that are created every 10 minutes gets cut in half. And so what we generally see is that, from inception, it ran up in price. then it had a big bubble and blow off top, and then it came back down and consolidated. And then when you had that, supply halving event, which I marked on that, that's a logarithmic price chart, and I marked on that the supply halvings. And so when you got that first red dot, that was the first time that Bitcoin had a supply halving. So instead of generating 50 coins every 10 minutes, it was cut in half to 25 every 10 minutes. And so that created basically a supply shock, right? Because the market had kind of found an equilibrium in that sort of, that kind of bear market that it was in. But when the number of new coins got cut in half and demand was still relatively persistent, that shot the price up. And of course, when that happens, then momentum traders jump on board, and you get this big price surge, and you get another blow off top, and then it finds, then it consolidates and finds, some sort of, more steady equilibrium, and then another, 4 years later, another supply halving happens. And so, so far, Bitcoin has kind of, done this, roughly 3 times. And so basically, this is, what I consider arguably the most important kind of long-term chart of Bitcoin, and just one of the things I'm monitoring. Because, if it were to say to fail to have a bullish outcome during one of its bullish cycles, its supply cycles, that'd be pretty bearish for the protocol. On the other hand, as long as that pattern holds, it's not surprising to see these kind of bull runs that keep coming up. And sometimes the media is kind of surprised by it, whereas a lot of Bitcoiners have been kind of looking at this chart and kind of anticipating it. And it's kind of interesting to see that it did so far play out like many of them were thinking.
Right. And by the looks of things, if this pattern continues, and that's a big if, that we still have a ways to go. The pain for us no coiners is still ahead.
That would be the bullish argument, yeah. Unless there were something structural that would throw it off course, that would kind of be the argument. And in some of these charts, we can monitor kind of the health of that that bull run to see if it's still intact or if there's signs that it's ending.
Okay, so let's look at this next thing. Seems to be a lot of math going on here. Market value versus realized value. Walk us through what you're trying to kind of teach us about here.
Yeah, so basically, because the chain is a public ledger, there's a lot of analysis that can be done to kind of determine what coins are moving and when. And so, of course, there's some degree of privacy with Bitcoin in the sense that you don't necessarily know who owns what address, but you can still identify what the different addresses are doing. And so, what this chart shows, the red line there is basically the unrealized profit. And so what this shows is there's kind of two indicators. One is the market capitalization of Bitcoin. So that's just like any stock, it's the price of Bitcoin times the number of Bitcoins that exist.
Okay.
And the realized cap is a slightly different metric that looks at Bitcoins the last time they moved on the chain. And so, if a Bitcoin's been sitting there for a long time, it basically looks at last time that moved and what the price was when it moved. And what that kind of establishes is a cost basis for the entire protocol, because you can look at every coin, see when it last moved, and see what the price was at the time. And then you kind of do a weighted average, and you calculate what is essentially a cost basis for current participants in Bitcoin. And it's not perfect because, for example, on exchanges, they can trade between each other, and those trades don't settle on the chain itself because they're just
Right.
kind of trading on, say, Coinbase's internal ledger.
Right.
But for larger purchases that do choose to settle on chain, this represents a cost basis on chain. And so what this metric shows is, when the red line's high, it means that the market cap is pretty significantly above the cost basis. And when it goes down into green territory, that means that it's below the current cost basis of the participants.
So how would you interpret that, though?
That so far, we're kind of strongly in the bull market here. If you look at previous periods, it's spent quite a lot of time in the red zone before it kind of ultimately peaked out.
Right.
But basically, what it shows is that there is, it kind of confirms some of the on-chain analysis that the weighted average of the participants is more than 50% in profit. And so at that point, you do start to see some degree of profit taking.
Okay. And then, so this next chart, you thought we hadn't had enough math, so we're going to do some more. It's market value versus realized value, but you have the MVRZ or Z score for our American listeners. What is this?
So this is actually really similar to the last chart. And so if you look at the blue and the yellow lines, those are actually the things I just referred to. So the blue line is just the market capitalization of Bitcoin, and the yellow line is the realized capitalization. So that's essentially the cost basis that people last moved their coins on chain.
Okay. Right.
And then the red line is just the standard deviation of how far or below the red line, the market cap is compared to the realized cap. So how far above the blue line is compared to the yellow line.
Okay.
And so when you get those spikes, basically what you have is a kind of a blow off top.
Right.
And so those previous spikes were kind of associated with the end of one of those 4-year halving cycles.
And
Whereas,
the good news for the Bitcoin bulls is that they were in 8 to 10 or 8 to 9 range in the Z score, and we're still at 4.
Yeah, so this would be interpreted as kind of mid-bull run if, a big if this current 4-year cycle is playing out anywhere similar to some of these previous cycles. And so if you look back in 2017 on that chart, for example, you saw that it reached about 6, and then it would drop down to maybe 3 or 4, and then it go back up to 6. And it was kind of the heart of the bull run, where it was staying elevated without getting extreme, and then it didn't really hit that blow off top until later in the year. And so, this is starting to look somewhat like that, of course, but now it's enhanced risk compared to where it was, say, 8 months ago.
Right. Okay. And for your final chart here that you brought, the HODL, is that how I say it? HODL? The HODL wave chart. What is this?
The HODL. Well, HODL is a misspelling of hold, and it's kind of a Bitcoin terminology. And so what this shows is, again, you have the the price in blue. That's just Bitcoin's price in logarithmic form. And then what the yellow line shows on the left axis is the percentage of Bitcoins that have not moved in over a year. And again, that's on-chain Bitcoin. So that's mostly kind of that's people holding it in cold storage, right? So that's not just money sitting on exchanges. That's coins held in kind of with Fidelity or in hardware wallets, things like that. And so those tend to be kind of strong hand holders, ones that they're not actually trading it, they're just holding or hodling, as the community would say.
Right.
And what you generally see is during these big bull moves, like we saw in 2013 and again in 2017, you start to see a percentage of that go down. Basically, the price goes up so much, it goes up 3x, 5x, or in some of those historical cases a lot more than that. And that's enough that some of those strong hands do they go get their hardware wallet and they bring their coins back to an exchange, and then they sell it into the market, and they get they kind of realize some of their profits.
Right.
And
sorry, I didn't mean to interrupt. Keep going, Lyn.
Well, just to finish, basically what we're seeing now is that by most indicators, this would appear to be somewhat mid-cycle in terms of the run. Again, if it's working out anything like the previous cycles, and that's because we have started to see some degree of selling from some of those long-term holders, but still not a very significant amount. A handful, a certain percentage of them have taken some degree of profits.
Okay, as much as I'd love to keep talking about the bits in the sky, I think it's time to move on to some more macro stuff. One of the things that I've loved about your analysis is your understanding of the change that we've gone through from monetary to fiscal dominance. And I think you were the first one that I've ever seen use that word, monetary dominance to fiscal dominance. I think it's been your insights has been remarkable, and I would love to talk about the fact that when you first kind of brought this up to everyone's attention, few understood it, few agreed with it. Everyone thought we were going to focus on monetary and try to fix all of our problems with more and more QE. I would argue that over the last 9 months, there's been a huge shift within the macroeconomic community, and people have started to understand how much and how strong fiscal policy can be. And as I'm starting to think about it, and kind of as all these people have come onto our side of the boat, Lyn, I'm starting to worry about what's the next step? Where are we going to make mistakes? How is this going to play out? And what is the market potentially missing? So do you have any initial thoughts on that?
Yeah, I mean that's definitely the the $1 million question is basically how to handle it now, and you can kind of characterize it as the the hard part of the trade versus the easy part of the trade, right? So if you're kind of buying into the liquidity shock or buying in the springtime because you were anticipating this big kind of wall of money, that was a somewhat easy trade. It was kind of the trade that the world's not going to end in a sense. But now that we've had a pretty big run up, including in some of the more cyclical sectors, then it becomes a trade-off between, you don't want to kind of exit too early in the sense that if you look over the past decade, for example, there are multiple times that people said, the fangs were overvalued, and then just 5 years later they just quadrupled, right? So
Right.
it's kind of that structural thing that was happening, and so it would have been a mistake to sell out too early, and so I kind of see a similar dynamic over the next 5+ years, where I would expect to see emerging markets do pretty well, commodities do pretty well, but you can still have overbought conditions among that trend. And so I'm kind of now in the phase of kind of watching that in rate of change terms to see, okay, how much treasuries are coming down, how much is the Fed buying, are we going to see kind of what's going to happen with nominal yields, who's buying treasuries, like are foreign sector buying, or we still mostly just get banks and the Fed buying, and kind of just monitoring those characteristics, and also go ahead.
Oh no, I was going to ask you because you mentioned earlier in your talk that you were kind of one of the things that you were watching was the increased federal treasury issuance coming up in the days and the months ahead. Why don't you talk a little bit about that and what you might think that kind of how that changes your forecast for the markets?
Yeah, so I mean, well, the Treasury publishes what they think they're going to issue, and that's on net, right? So it doesn't include kind of just rolling over existing debt, but it's kind of like how much more debt are they going to end up issuing during that quarter, and so their estimates for quarter one, which now we're about a quarter of the way into, but basically they plan to issue over $1 trillion worth of Treasuries on net.
Okay.
Uh, and at the current rate of buying, the Federal Reserve is buying 80 billion a month, or about 240 billion a quarter. And so the
Okay.
big question is, who's going to buy 700 or 800 billion dollars of treasuries? Is it going to be, is Japan going to come in and start buying it? Are the big banks going to buy it? Are we going to have domestic sources buy it? That's kind of the big question, to see who ends up with those treasuries, or is it going to be that the Fed has to kind of uptick their rate of purchases a little bit?
And do you think that that's what's happened in terms of the bond market over the past few months? How it's backed up in yield?
Yeah, that's what I. So in my August newsletter, when I also talked about potentially some of the, kind of the near-term risks of gold at the time, I outlined that a little bit with the treasury market, because we're in a situation where nominal yields were well below the break-even levels,
Right.
and we're still like that. But and that's historically fairly uncommon. It's not a common thing that happens, and there are all sorts of potential reasons for that. And I showed, for example, that with the Fed having bought so many of them, they're certainly influencing price in some way, but it's always debatable, arguably, even if they're influencing up or down. And I kind of showed it compared to some of the copper or gold ratios, basically some of the things that tend to be correlated with, say, the 10-year yield. And what I showed essentially was that if the Fed doesn't uptick their buying, there's a decent chance that nominals will start to go up. Because basically they have tapered their purchases compared to what they were doing during the liquidity crisis, back in March and April, and that period. And now they're kind of buying at this very steady rate, even as issuance sometimes goes up and down. And so we have seen basically a lot of supply, and therefore I think some price pressure.
One of the things that's kind of shocked me is how, when we were chatting in the summer, yields in the 10-year with 50 basis points. And all the bond bulls were talking about how if there was a backup that the Fed was going to do yield curve control and they would never let the yield go over 100 basis points. And yet here we are at 110 basis points or whatever, and the Fed has showed no signs of doing yield curve control. I ask you, why do you think the bulls are always so keen for them to do this? Well, I guess they're keen because they're long the bonds. And do you think that this is a real concern, anytime in the near future?
Yeah, so I think I'm somewhere in the middle of those two camps. And there's some people saying that yield curve control is never coming or can't be done. Other people insisting that would happen at a super low level. My kind of overall position, based on where I see some of the bottlenecks, or what history intends, or what the Fed themselves have said, is that I do think that at some point, in the next number of years, that there probably will be yield curve control. However, I think the big question is, what level would that happen, or what kind of conditions would lead that to happen? And so I think, at the current time, the way I'm kind of observing it is, I think that the Fed is kind of fishing for a pain point a little bit. I don't think they have a strong incentive to to try to cap yields unless those yields are causing some sort of pain point.
Right.
And so as long as treasury auctions go reasonably well, as long as there's not a disorderly sell-off in some way, they don't have a strong incentive then to step in and control yields. And so, for example, I in some ways I compare it to what happened in late 2018, where the Fed just said they're on autopilot with quantitative tightening, and then the market, had that big freak out. S&P 500 went down about 20%. Growth stocks went down more. No junk bonds were issued for like 6 weeks or something like that.
Right.
And then Powell had to come out and say he was just kidding, and they're going to be data dependent. And so I think they might have kind of a more like a mild version of that, where they're just going to say we're going to do our thing until kind of the market tells us we have to do something different.
But what do you think that pain point is? Like, do you think it's 100, 200 basis points, 300 basis points? Like back in 2018, people forget this, but the 10-year bond was 3.25. That's
Yeah,
200.
absolutely.
Yeah, it's 200 basis points plus away from where we are now. We got a long way to go just to be back where we were 2 years ago.
Yeah, I agree. One thing to look at is how much federal debt has gone up since then. And so in the current way that they manage things, there's the whole MMT thing, which is a separate issue, but basically in the current legal structure, they do have to issue all these bonds in order to kind of offset their expenditures. And so we have had a pretty big uptick in the amount of treasury debt outstanding, both in absolute terms and as a percentage of GDP. And so if they were to let that rise, too far, then interest expense would start to become a pretty massive percentage of the federal expenditures.
Right.
And that would basically be an acute fiscal problem, unless they were to just change the rules, because ultimately they are the issue of currency. But within the current context, I think there are pain points, and that because there's more debt in the system, that pain point is probably lower than the 3.25% that it was back then. But I
Okay.
think the range is somewhere between 1 and well into the 2s.
Okay, and speaking of which, we have a new Treasury Secretary, Janet Yellen's coming. She talked about that she was open to the idea of 50-year bonds. Do you think that there's going to be a change in the Treasury's makeup of their portfolio?
I think there could be. I don't have a strong view on it. I think that issuing basically long denominated debt and seeing how the market takes it, I see that they don't really have a downside of trying. I mean,
Right.
there are countries out there that issue 100-year paper. So if the reserve currency can't try to do it, I don't know what the
Yeah.
point is of being a reserve currency.
Seems like a no-brainer to me. If I was the Federal Reserve right now, I'd be hitting every bit I could was far out. Now, that's because I'm a bond bear. Let's talk a little bit about if this bond bear market develops and how that'll affect different asset classes. So let's just imagine for a second that the curve gets steep. Let's say that the vaccines roll out well. We get a situation where the economy is going along great. Come this fall, the Fed lets the inflation run hotter because of their average inflation targeting, yet the long end starts to kind of develop worries about the coming inflation. And we see a situation where that 10-year does go to, let's say 2.5, not quite the 3.25 that you said that was the pain threshold. But let's just talk about, imagine that the short end is 0 or a quarter and the long end is 2.5. What do you think happens to all the different other various asset classes from that move in bonds?
Yeah, so what should happen in theory might, and it doesn't necessarily say what's going to happen in practice because markets can be funny, but theoretically that should be, if we go back to some of the charts we talked about earlier, for example, that should be decent for the value versus growth outlook, because
Okay.
those, because we've had a parabolic rise in the valuations of growth stocks, that's largely predicated on very low interest rates for a long time. And just the way that the kind of discounting works, growth stocks are a little bit more rate sensitive than value stocks in terms of what discount rate you use when kind of doing your analysis.
That's right, because
And
they're the longest duration asset out there because all the growth is in the future.
exactly,
Yeah.
yeah. And for example, if you look back in 2018, during that tantrum that the market had, Apple was down something like 30 some percent. I mean, growth stocks generally did worse than the broader market, and that's because you had that specific issue of that rising benchmark yield.
Right.
And so generally speaking, banks should do reasonably well in that environment, And more broadly, kind of anything that's cheap but still doing reasonably well in terms of quality should be able to hold up, somewhat okay. Whereas some of those really high flying growth stocks with, their cash flows deep into the future, many of them aren't even profitable yet. Those are the ones that are potentially at risk.
So do you
But
think? Oh, sorry, I don't mean to interrupt, but do you think we could get a shift within there without the market freaking out? Like, can we get a rotation that enables those stocks that you just talked about being bid, and yet the bigger cap, growth stocks going down without kind of disaster occurring?
So I would expect to see, some sort of kind of mild disaster
Okay.
potentially, but I don't. But honestly, I don't have a high conviction on it. It's actually, I'd be curious in your thoughts on it too, because if our closest approximation is what happened, in late 2018, but it doesn't necessarily have to work like that again. And so I don't have a strong conviction on how the market, if you look at the broad indices as a whole, would take that. And that's one reason why I incorporate individual stocks into my portfolios, because by having like a 3 to 5 year investment horizon, mostly based on fundamentals, when these kind of market changes happen, I can kind of either buy more, kind of trim if they get too excessive, rather than worrying too much about what the broad indices are doing.
Right. But the other difference, I guess, if I'm thinking this through, in 2018, we didn't have a fiscal stimulus going on. I guess we had tax cuts going on previously that had gone, right? Am I right? Was the tax cuts bill before or after that 2018?
So they went into effect right at the beginning of 2018, but they were correctly front run by the market
Right.
throughout 2017.
But this case, I guess the difference might be that we'll still have fiscal pumping the putting liquidity into the system. So we might have a situation where we could actually get a rotation and not have those bigger stocks collapse. And speaking of fiscal, what do you see in terms of the government's willingness to keep this up? Is that something that keeps you up at night?
It's something I'm watching, just because there's a natural feedback loop there, right? Because if they don't do it, then you potentially get more kind of civil unrest, or kind of tensions among the public. But then if they so it's just something I'm watching. And so, for example, I think that the way that the Georgia Senate elections worked out, that somewhat increases the probability of significant stimulus. But because the overall political divide is so narrow, people shouldn't take anything for certain. There could be delays. There could be kind of smaller packages than some people expect. For example, if you look at the makeup of the Senate, you have that 50-50 split, and then the VP would be the tiebreaker if there were an exact split. But some of the Democrats, like the one from West Virginia, for example, they actually lean somewhat conservative, and so it's not a given that say Joe Biden will be able to get the numbers through that he thinks. And so that's actually it's one of those environments where stock selection is unfortunately kind of dependent on the macro forces playing out. It's really kind of the environment we have to kind of understand, and be able to see what's coming down the pike in terms of fiscal expenditure and overall kind of broad money supply increases.
One of the things that I'm looking at is I'm thinking about the fiscal stimulus, and I'm thinking that at the very least, I think it's going to change. As we go through in time, it's no longer going to be this emergency, just throw it out there and hope it sticks. And it's going to be more and more targeted. And I think that to some extent, you might argue that if it is more targeted, it will be designed to try to lift those, the people who need it the most at the bottom end of the rung up. And although it's probably better from a societal point of view, from a market's point of view, let's face it, a lot of this extra money, the stimmy checks, as the kids call it, has been going into the market. So I look at it and say, we might be on the verge of the stimulus no longer being the great kind of stock market buoyancy, force that we've had in the past. Do you have any thoughts to that idea?
Yeah, I agree. And I could add 2 points to that. I think one is, if you start to see, a shift from kind of fast money like stimulus checks and unemployment benefits, and you start to see, say infrastructure bills. Right? Of course, those are always in question. I mean, people have been talking about infrastructure bills for years, and so far they haven't really kind of done something like that. But if we start to see more infrastructure bills in the United States and other countries, that's kind of a slower, longer duration stimulus in a sense, and it's not one of those kind of fast money ones. And that doesn't just get into people's accounts and then into their Robinhood, accounts. That actually that has other impacts. I mean, that could, for example, impact commodities more so than bumping up Robinhood stocks. And so I agree that as that kind of profile, that stimulus changes over time, that I think could take a less speculative form. And then the second point I'd say is that we have to watch also to what extent they try to offset some expenses with tax increases,
Right.
because we've seen the Biden administration, and Yellen's mentioned it as well, is that they might want to increase taxes. And again, people can debate whether that's good or bad, but in terms of just monitoring how that's going to affect, the stock market, that overall would be, in a vacuum, that's a negative variable to watch on the performance of those kind of major indices.
So, given all these different backdrops, you mentioned that you're getting slightly more defensive. Is there anything else you've been doing to your portfolios?
No, I just did a very small kind of rotation and sold a couple of the heated positions. I didn't change things structurally. I don't like to accumulate a lot of short-term capital gains, or kind of have high portfolio turnover. But I did tighten down a little bit of kind of risk and raise a little bit of liquidity, just because there were some signs of just the put to call ratio and just general euphoria. If you look at what's happening with unprofitable tech stocks, if you look at what's happening with small trader call buying activity, or looking what's happening in say DeFi, decentralized finance, like what's happening in some of the Ethereum spaces. Basically, wherever you look, all the different ways where small traders can do things with money, that's kind of all hitting a pretty high level.
Right. And so when you look throughout the world, like that's, no doubt in the US, there's lots of speculation going on. Is there anything throughout the world, like other countries, that attract your attention?
Oh yeah, overall, I mean, going back to that, for example, that emerging market to U.S. chart, I am more favorable to international equities, for a couple of reasons. I mean, one is, if you get that value over growth trade, many markets have more of a value tilt than the S&P 500. And
Okay.
so, for example, European markets or Japanese markets, they have somewhat more of a value tilt. Emerging markets are somewhat mixed because, of course, you have some of the big growth giants from China, but then you also have value stocks elsewhere in those areas, and you can kind of you don't necessarily have to buy like the emerging markets ETF. You can buy single country ETFs or regional ETFs or individual emerging market stocks. But overall, I do think that the valuations and fundamentals of a number of foreign equities are reasonably attractive, and especially if you were to get that kind of that weaker dollar and that kind of structural change after we get past some of this, this really kind of bullish, kind of euphoria and trading sentiment.
One of my favorite picks has been for the last little while has been Japan. I look at Japan; they've been doing a lot of things right. They were cheap, and not only that, their fiscal is through the roof. What do you think of the land of the rising sun?
I like Japan, and one some of the companies I've been looking at are the trading companies, and so Warren Buffett made news last year because Berkshire purchased 5% stakes in the largest trading companies.
Right.
So those, for people that aren't familiar, those are basically these conglomerates, and they're highly involved with commodities, but also things like real estate. Like they just kind of and also supply chains and industrials. They just have a really broad footprint of kind of real assets. And so I look through a bunch of them individually, and there's one called Itochu Corporation, there's another called Mitsui. And so I became pretty bullish on them, especially Itochu, just because they had pretty low valuations, and pretty good fundamentals. And they're dividend stocks. They have deleveraged over the past couple decades, and so I think there's certainly a good amount of opportunity there. I don't know if I have a strong conviction about the index as a whole, but I think it's one of the healthier markets out there. Kind of surprisingly.
I did the same thing when Warren went and looked at it, bought it. I waited because there was the Warren pop. And then when it kind of got quiet, I went and picked away at it. And I'm not as smart as you. I don't go and actually pick the names that I like best. I just bought all five of them. So can you tell me which one you like best and why you liked it best?
So I looked at all of them, and I didn't have a strong conviction, but the one that I felt the most kind of I think matched my risk profile was Itochu Corporation. That one had some of the lowest leverage metrics
Okay.
out of the bunch, and it has somewhat of a different background than some of the others. And they've historically been very well managed, and so I found that one pretty compelling. But I think I actually agree with the approach that Buffett took and that you took of just kind of buying the industry, just because I think all of the top ones have a lot of really good kind of forward potential.
I had never remembered Buffett ever going and buying a basket of foreign companies like that. It actually quite shocked me.
Yeah, it's somewhat of a macro bet. It seems it's kind of a kind of pro commodities bet. He also, I mean, in the letter they released, they said they're willing to potentially buy more, and so it's kind of a multi-billion-dollar capital sink. And I think his plan is just kind of to let it run for a while. I think it's kind of a long-term position, and I can see why. It's you kind of have pretty low tail risk in many ways. The valuations are pretty reasonable, and it's a they're dividend stocks, so they kind of fit his kind of just buy and hold profile.
And I think as well, he didn't hedge any of the currency, or we don't know for sure, but I don't think he's typical one to go and enter into hedging transactions. So he's long the yen. What do you think about the yen? Like, does it worry you? Like, do you sit there and see all the doomsday people talking about all the debt outstanding, and does that worry you?
Not really. I analyzed that in a couple different pieces, and so what Japan has some downsides like the massive the debt level, but they have a current account surplus that's pretty structural. They have the largest net international investment position in the world, so they own more foreign assets than foreigners own of their assets, which is the exact opposite position of the United States. And so if there's a variety of reasons why people talk about Japanification. But I think the U.S. is headed in a somewhat different direction because we're going into this period with pretty large twin deficits, whereas Japan, they have a pretty strong overall financial position, and a lot of their debt is in the sovereign sector, and a large portion of it's owned by the central bank.
Right.
So
Like
yeah,
I think
I
half
think
of
that
it is owned by the central bank. They could they could
yeah,
they could flatten that tomorrow, and it'd be their debt would be halved.
and I think it's one of those things where I don't think the yen itself, I wouldn't want to just hold a lot of yen in the same way I wouldn't want to hold a lot of dollars or a lot of euros. I think we're going to, over the course of the 2020s, I would expect to see a pretty significant currency devaluation. I think you could see inflation in multiple countries and perhaps some degree of yield curve control or other forms of financial repression to ensure that real yields are effectively negative for a while. And so I'm not, say, bullish on the yen itself, but compared to the dollar, I don't see kind of major structural risks there.
Okay, so when you look at the environment today, what do you think is the biggest mistake that investors might be making?
I think, well, I think some of these kind of bubble areas are concerning. I think that there are areas in electrical vehicles or some of the unprofitable tech stocks that I think that the valuations are if you're playing 20, 30, 40 times sales, sometimes more. I think those are concerning. And an example I like to use is Cisco. So for example, in the late 90s, Cisco had this massive run up in price. The reality of it is that their fundamentals pretty much did everything that the bulls thought it would do. I mean, Cisco became the backbone of the internet. They kept growing revenue for the next 15, 20 years after that. But that didn't prevent their stock price from just utterly cratering and taking like 2 decades to recover.
That's that's,
And
that's a great analogy. I've never actually thought about using Cisco. I always used Amazon, but Cisco is actually probably a better example.
yeah, I like Cisco just because there's really good charts out there. Like you can put the revenue on one, and you can put the market capitalization, and just kind of show them on the same axis. And you can just see revenue just kind of kept smoothly going up, and it did great. Whereas the bubble just went parabolic, and then it went straight down, and then I think it still hasn't recovered. And so, for example, you can see a situation where some of these stocks, maybe Tesla does quadruple the number of cars it sells, or even sell 10 times as many cars, a certain amount of time in the future. But that doesn't necessarily mean that its stock price will, in the long term, be able to sustain some of these trends.
So I'm glad you said that comparing Cisco to Tesla and not me, Lyn.
Yeah, so yeah, I'll have people kind of
That's right.
up me on that.
The Teslonians, but at least you're a Bitcoin bull, so you won't get them. You won't have fun staying poor like Patrick and I.
Well, you should see. I made the Ethereum people a little bit annoyed at me the other day. So,
Oh, what did you do?
well, I explained why I don't personally go long on Ethereum. And it's actually, I didn't even have a bearish, it wasn't, say, arguing that Ethereum is going to go down in price, just that, the growth of the ecosystem is not necessarily correlated to the growth of the per value token price. And so, that kind of
Yeah.
got some pushback from the Ethereum community.
Oh, they're a funny bunch. Anyways, God love them. You know what? I love to see people so passionate about what they believe in. So, Lyn, it's been a pleasure having you. Thank you for sharing your insights with us. Why don't you tell people where they can find more about your great service? I am a paid up subscriber. I enjoy it tremendously. Why don't you tell the folks where they can check out more?
Yeah, sure. I'm at lynalden.com, and most of what I do is free. I mean, I have public articles and I have free newsletters, but then also I have a low-cost premium service where I provide a report every 2 weeks. We cover macro things as well as individual investments. I provided updates for gold, for Bitcoin, for things like that. Whatever kind of I think the cruxes of what's happening in the market. What are some of the kind of the interesting things that are happening?
Well, thank you very much for being with us. We look forward to having you on again sometime.
Yep,
Great to
thanks
have
for
you on.
having me.
It's our pleasure to welcome to the show today Zach Resnick from Unbounded Capital. Unbounded Capital is a BSV ecosystem fund, and we're going to talk a little Bitcoin and we're going to talk a little BSV. So, Zach, welcome to the show.
Thanks for having me on today, Kevin.
I've been looking forward to this for a long time. As many people know, I'm one of those no coiners, and you're far from a no coiner, but you're definitely take a little bit of a different spin on it than a lot of other kind of just people that are embracing Bitcoin and not thinking about it, or let's just say not doing the same sort of amount of work that you've done. Why don't you take us a little bit through your journey, how you got here, and where you ended up?
Yeah, so I started getting involved in kind of the Bitcoin and blockchain space for, I think, similar reasons to many people that own BTC today, which is I started learning about kind of monetary policy and our fiat system and started to become pretty skeptical of that. And BTC seemed like kind of the answer and a good investment opportunity. And I got lucky, got involved relatively early. But, after kind of seeing the price of that asset go up, by seeing so many people focus on price and trading and speculation, I started to think, well, what got me started in this initially was kind of changing the world and what this technology can do for the world, independent of kind of this speculative, digital cash or digital gold. And then I found myself moving to the Bay Area to get more involved. I thought I'd be more involved in the entrepreneurial side of things. Ended up doing a lot of investing, trading, and arbitrage, and started working with my cousin out there and started managing some of his capital. And we had a great run in 2017, beginning of 2018, and that gave us the confidence to start a firm investing in kind of the blockchain and crypto space, broadly speaking, with an opportunistic strategy that did, both, fundamental investing as well as like arbitrage and trading. But as the space got more efficient, started focusing a lot more on the fundamental long-term investing, and the more diligence I did once we started bringing in some other partners to the firm, the more bearish I became on the space as a whole. Just started seeing, a really high ratio of noise to signal, and a lot of people raising millions or tens of millions of dollars that I think had no seriousness around actually kind of achieving the vision they sold to their investors.
Okay, so why don't you tell us about that vision that a lot of these Bitcoin funds sell to their investors?
Well, the space has changed a lot since then. In 2018, a lot of the vision was in kind of around these initial coin offerings, and how if you had a company, but the company had its own coin or currency, it magically would be, a company worth 50 to 100 times as much as other companies. I think most people kind of now look back on that as naive, kind of putting it charitably. And unfortunately, it attracted a lot of kind of the worst of the worst of people that, did a combination of outright scams or just, paying themselves inflated salaries, big expense accounts with no seriousness around actually kind of achieving this vision of decentralized everything or cheaper payments. Or, there's all sorts of things that kind of people promise with blockchain. And frankly, I think the vast majority of that is possible and inevitable. But if you build on blockchains that don't scale or don't work, and you don't put in the work on those business, you don't really have a chance of achieving that vision.
Right. So were those the infamous altcoins that we hear about? And was that a function of 2017, like a little mini bubble within the bigger crypto bubble?
Yeah, I mean, I think the quote, the altcoin bubble, there's definitely was still a lot of it in 2018, although, the height of the bubble was like fall 2017, winter 2017, 2018. And I'm guilty as ever in terms of, fueling that bubble, profiting off that bubble, and thinking that, all these companies, because they had their own coin, would, have some huge advantage. I still think there's, tokens and things that are not, just useless currencies that can provide value, but the context in which, pretty much all of those coins or currencies or tokens existed didn't really have a chance of long-term success.
Okay, so you have this fund and you invest, you arbitrage, you make fundamental investments, and then you see it changing. Walk us through what you saw in terms of how the market was changing and where your attitude started to change in terms of how you approached your your vision towards crypto.
Yeah, so I would say we actually got lucky and kind of, started to really understand Bitcoin and blockchain before we started to see, I'd say, the real large market changes we're seeing now, and that we, envision continuing to occur in the future in even bigger ways. But I went to a lot of different crypto meetups and conferences to learn more. And at all of these conferences, always felt like that, scene from The Big Short, I think it's 2007 Las Vegas real estate convention, height of the bubble. You just feel the froth everywhere. Everyone's talking about, even if they're raising money for their company, how they're running their company's balance sheet like a hedge fund and all the awesome crypto trades they're doing. That was just pretty par for the course.
Okay.
And then, at our firm, we had a philosophy on always trying to steel man our positions.
Okay, what does that mean? Sorry.
So steel manning is, having, one member of the, the team, the investment committee, take kind of the contra point of view or position,
like the 13th man in World War Z.
Yes, exactly.
Okay.
So once a week we have like a proper steelman call where someone kind of takes the skeptical view of everything in our portfolio and perhaps the positive view of some things that we passed on or are considering. And that led us to kind of learning more about kind of the Bitcoin Cash and Bitcoin SV versions of Bitcoin, where at the time, this is now like 6 months after getting the fund officially, started, registered with the SEC. We had pretty low opinions of Bitcoin Cash and Bitcoin SV, largely due to both unfavorable reporting and just a lack of reporting of what these kind of versions of Bitcoin are doing. But then we started noticing just widespread censorship of some of the people involved, notably like Roger Ver with Bitcoin Cash on platforms like Reddit. That kind of got our spidey senses tickling, which is like, oh, why do people feel the need to censor this guy? What do they feel threatened by? What's going on here? And that led us to attending the Bitcoin SV meetup in San Francisco. And this was in March of 2019.
Okay. So I have so many questions there, but before we start, who had the vision to do the Steelman? Because I'm assuming you're a pretty young guy. You sound like a young guy. That was actually quite wise, whoever it was. Was that something that you came up with on your own? It was something you read, your father passed along? Like, where did that come from?
So I'm really lucky to, at the firm be working with people that I, want to be working with for decades to come. And one of those guys is, my business partner and one of my best friends, Jack Lasky. We used to play poker professionally together. We ran a poker business together. We both studied music together in school. And we're both kind of quite argumentative and contrarian to our core. So our kind of friendship really blossomed over doing and building things together. And then, arguing, bickering, discussing, debating, however you want to call it. So that was kind of already part of the way that I, was growing up and the way Jack was and how our friendship evolved. And then it, as I was thinking about culture and process, it just seemed to make sense that, some of the biggest mistakes investors make is, not giving enough credence to other points of view. So might as well have something that kind of enforces that on a regular basis.
Wow, that's really wise beyond your years, Zach. So now let's talk about Bitcoin SV, Bitcoin Cash. Why don't you take a moment just to back up and explain to people Bitcoin and then the two other forms that you're talking about, the Bitcoin Cash and the Bitcoin SV.
Well, this is kind of like, in terms of all these different names that we're talking about and whether they're forks or not, or what to call these different things. It's almost like, do you call Israel and the West Bank Israel? Do you call it Palestine? Do you call it Israel and Palestine? Do you call it Israel? There's a lot of politics involved, and kind of the language you use, I think, reflects kind of the understanding of the history. And I would say my understanding is definitely, a minority or contrarian point of view within the crypto mainstream. So I just want to preface that, although of course I think what I'm saying is the most accurate, which is all these versions of Bitcoin kind of started in 2008. And when people say forks, I think the intuitive thing to think on a fork is that, hey, there was this version of Bitcoin, someone changed something, and then it became this fork, where that's not really accurate in terms of what happened with Bitcoin. So the Bitcoin network was always kind of scaling and growing, and there was always this big incentive for miners to innovate and figure out how many transactions could go into a block. And if you were able to fit more transactions in a block, you were able to collect that incremental revenue on transactions.
Okay.
But then, shortly after kind of Bitcoin was started, it was co-opted by, a small group of kind of extreme anarchists and libertarians that wanted to use this kind of solely for the ends of kind of having government proof or censorship proof money and payments.
Okay.
We saw it kind of take off in its first big way for payments on the Silk Road. Where Bitcoin was really designed, for kind of something completely different. But, as things evolved, that group of developers started to realize that if the blocks got bigger and bigger, they would have trouble resisting law enforcement in the future if they wanted to kind of shut the Bitcoin network down or ask them to remove illegal transactions or money laundering or theft on the Bitcoin network, like government does with any other type of way kind of value or money is stored.
Okay.
So what they wanted to do was, instead of allowing Bitcoin to scale and be used for all the amazing things that Bitcoin can and is being used for on the BSV version of Bitcoin, they decided to cap the size of blocks at 1 megabyte. And this was kind of the scaling debate wars that occurred in 2017 that ultimately left kind of this fork happening where the BTC version of Bitcoin changed the network to cap the size of the blocks, but this minority of developers was able to get a majority of miners to support this vision because they knew that these miners didn't want to, nor could they compete long term to innovate. So they'd rather back the horse that allowed them to extract more kind of profit off transactions in the near term once the Bitcoin network got clogged. So that's kind of how the BTC and BCH forks happened.
Okay.
Where Bitcoin Cash was much more in line with kind of what Bitcoin was in the original, but it got a minority of miner support. Therefore, the ticker changed and it gets called a fork. And then basically, a similar type of thing happened with Bitcoin Cash and BSV, where BSV is kind of the one today that doesn't have a limit on scale, where BTC has a really small limit on scale. Bitcoin Cash the limit is 32 times as large, but they also have added all these like privacy features and things to the protocol that make it just really unusable for any type of widespread business adoption.
Okay, so I got to take a moment to highlight the fact that the scaling debate wars of 2017 sounds like the next Star Wars trilogy. Okay, so I guess I kind of understand that there's these different forks or similar technologies. They're all basically based on the same things, but yet you argue that over the long run, you think BSV will be the victor and will end up being the crypto of choice. Why don't you walk us through why you've come to that conclusion and how that kind of thinking has evolved?
Well, I want to be clear, Kevin. I don't think it'll be the crypto of choice as crypto is defined today. I don't think BSV will be a better government-proof money that antagonizes central banks and governments around the world. I think the Bitcoin network at scale, or any blockchain that scales, of which there's only one that's trying to do that today, will transform the way data is stored and our internet functions.
Okay.
Fundamentally different type of
So why don't you explain that? Like, take a moment to really explain why BSV is different, and what your vision is different than what a lot of other people are thinking about as the traditional Bitcoin.
Yeah, well, again, I would argue it's not the traditional Bitcoin; it's the popular version of Bitcoin.
Okay.
For now, that I don't think will be the case in a number of years, potentially even this or next. But the popular version of Bitcoin, if I'm going to do my best job steel manning or outlining the bull case for BTC, is that there's all this inflation, there's government money printing, you can't trust putting your assets in fiat currency. So if you're going to have a place to store your wealth, it needs to be resistant to money printing and governments doing things to it. And the best version of that we have today with the most network effects is the BTC version of Bitcoin. And, it's been proven well so far because the number has gone up a ton. So that's I'd say a fairly charitable case for why BTC is kind of going to win out. But part of that is saying like, hey, if the government finds that, for example, millions or tens of millions of dollars has been laundered using Bitcoin and cryptocurrencies on the Binance exchange by Al Qaeda, well, maybe if they can track those funds, they might want to return those funds to the governments or to other people versus having it lay in the hands of Al Qaeda the way things would work now in our banking system if a bank account was to be revealed as, a bank account of Al Qaeda. So those in the BTC and larger crypto community are against that. So they want to make sure that the network can resist all government and law enforcement efforts such that they prioritize being able to run the Bitcoin node software on a phone or a laptop versus allowing kind of Bitcoin to scale, compete, and do all these great things, which requires kind of professionalized software, professionalized mining and node operators. Because once the Bitcoin blockchain grows in size, you could no longer kind of maintain it on a phone or on a computer. So that's kind of the big essence of this debate, which is like how important is this very specific version of decentralization to Bitcoin. And as you can tell, I would argue that I think it's definitely overblown. It's misguided. I personally have sympathy to those that are wanting to store their wealth outside of kind of potentially inflationary fiat currency. But I think the strategy of trying to say, antagonize these governments and, build something where the design choices are to effectively resist inevitable government regulation and not new regulation, but just the enforcement of existing regulation, I think is naive and likely to end badly.
Okay.
That being said, I think people can make, money off it in the near term. I'm more bullish than bearish on the price of BTC in the near term, but not long for over the long period of time.
Okay, so why don't you tell us the bull case of why you think that BSV is a much more attractive long-term asset to own?
Yeah, I think it's more attractive to own because of the hundreds of companies that have already built on top of that network. You don't have companies that are building on BTC because the transaction fees today average around $5 and they're really expensive. So you can't really do any kind of unique things with data, where the kind of the Bitcoin at scale vision is not just say buying and holding this BSV and selling it to someone later for a higher price. Even if no one speculates on BSV, I'm bullish over the long term because it's really more of a commodity than say a digital gold or a cash that's tied to the value of real estate of the Bitcoin network. So if you want to use the Bitcoin network to store data, to do payments in an immutable fashion as cheap as possible in the world today, you need to use the BSV version of Bitcoin. And to take advantage of the security benefits of Bitcoin, you need to transact, even if it in an abstracted way, with the native token for that network or the BSV token for the BSV network. So there's kind of this floor of demand from people that are using and building on top of the network that is independent of people speculating on the price of that asset.
Right. So why don't we back up and just try to explain to people what this kind of end demand in terms of actually using a decentralized network, like who would be using that? Like who would be the clients, the companies that you talk about are already using BSV as a way to store data in a decentralized method?
Well, so I just want to make something clear, Kevin. As most people in the crypto community would define decentralized, BSV is not trying to be that type of decentralization.
Okay.
It is meaningfully more, say, decentralized or more accurately distributed compared to kind of any other system of ordering data, storing data, payments today. But if decentralized is defined as, evading government law and regulation, that is not kind of what the ethos within BSV or what is happening is.
Okay.
So, for example, there's actually some pretty big news for kind of the crypto blockchain community that I think will end up being quite good for BSV that occurred earlier this week, which is that the Visa network announced that they're going to be supporting and integrating the USDC stablecoin, which is a stablecoin of the company Circle, which is backed by Goldman Sachs. It's the second largest stablecoin and generally viewed as kind of above board on the Visa network.
Okay.
But this stablecoin has, versions that run on different blockchain networks. But the blockchain network that has the lowest transaction fees, while still kind of giving you the benefits of immutability and what blockchain promises, is BSV. So most of the trading volume occurs on the Ethereum version of USDC. But given the Ethereum transaction fees are average today between 15,000 and 50,000 times as expensive, I think after Visa makes this integration, they're going to choose to put, 15,000 times as transactions for the price of one on Ethereum using BSV. So there's all sorts of kind of use cases involving things like micropayments and data interoperability. That's kind of a recent piece of big news, but I could go on in terms of what some of our portfolio companies are doing, other companies building in the space. But these are most importantly things that are not possible on any other blockchain because they prioritize kind of a misguided view of decentralization rather than encouraging the network to scale.
Okay, and so I guess that's the big difference is that like almost BSV was created with the end result being try to get as many transactions on this distributed network as possible for as cheap as possible. Have I summed it up kind of somewhat correctly, a layman's version?
Yeah, except I would replace BSV with Bitcoin because that's what Bitcoin was created to do. That's what's outlined in the Bitcoin white paper. There's just the popular version of Bitcoin that people call Bitcoin isn't doing that, which is why I think language is important because BSV was not created recently. Bitcoin has been around for forever. Unfortunately, this is just not the popular version today, but why, from an investment perspective, I find the opportunity wildly asymmetric, given this is the only one working, but it, trades a lot lower than some of these more popular ones.
So why don't you talk, you mentioned earlier something about there being some characters that were getting kind of shunned within the crypto community and it ended up being a little bit of politics. Why don't you walk us through what's happening there? And is that with the BSV? Like, is there someone there that's put their weight behind BSV, and yet a lot of the mainstream crypto community has chosen to kind of push them to the side? Why don't you tell us a little more of that? Give us some more color there.
Yeah, so there's a guy named Craig Wright. He's an Australian computer science, network security expert, lawyer, kind of all other sorts of accolades. And in 2016, he was outed by Wired magazine as the creator of Bitcoin.
Okay.
He kind of denied it for a period of time and then felt kind of there was too much overwhelming evidence and, relented and say, yes, I did create Bitcoin, and then started to become more active and involved in Bitcoin after kind of taking a hiatus from when the Silk Road was created. The vast majority of people in the crypto space don't think that Craig Wright is the creator of Bitcoin. They think that he is kind of a fraudster and a scammer. They would actually say that he just started claiming he was the creator of Bitcoin inaccurately versus the fact that he was outed after, not being involved in the network, being scared from his kind of liability, given how the network was kind of radically taken over and transformed to, facilitate illegal money laundering and drug and assassination transactions early on in its development. And that kind of controversy around, is Craig Wright the creator of Bitcoin? Is he not? Is why the vast majority of people don't even look into BSV in a serious way. They just say, oh, that's Craig Wright's scammy thing. He's a scammer. He's a fraudster. Therefore, I don't need to look into what's happening here. And I was guilty of that myself. Despite identifying as this, contrarian investor, always trying to steelman our stuff, doing maybe 15 steelman calls, we never even properly tried to steelman this until we happened to meet the people building in the space. So today we have incredibly high conviction that Craig is the creator of Bitcoin. We've, have a piece that perhaps you could link to in the show notes, called Why We Think Craig Wright is Satoshi and Why That Matters, after doing more extensive legal diligence and research than any other firm in the world. And I think is a big reason why there's asymmetric upside for BSV, the asset, in the relative near term, due to kind of more people understanding that Craig did create Bitcoin.
Okay, so I think I understand the use case of BSV and kind of the longer term. It's almost like a return to what Bitcoin was originally designed to do, and it's actually taking the original vision to its kind of more logical conclusion. How do you position your fund and your investments to take advantage of what you think is going to happen in the coming years?
Yeah. So first off, I just want to, preface that, our fund offerings I'm going to discuss now are only for accredited investors. And we have a fund offering that is not 506c3 that I can't really speak about in detail on this call. But for our two main funds, our opportunity fund is a vehicle that's designed to give our investors long-term exposure to our thesis. So in that fund, we make both venture investments in terms of the top companies that are making it easier for other people and companies to access the incredible technology of Bitcoin, as well as kind of liquid asset and derivative exposure to BSV, the asset. And most of our time is spent and most of the capital is allocated to these venture investments. Although something that we like about this kind of hybrid venture hedge fund structure and the open-endedness of it is that we're not just getting paid to kind of pick the best companies. We're not just getting paid to have a good liquid investing strategy. We're getting paid to know when to toggle between the two. And that's kind of served us well in the past. And that was kind of the first fund that we started and where most of our assets under management are in.
Right. So you can not only invest in the underlying asset itself, but you can invest in companies that are kind of the bones, the picks and shovels of that asset.
Exactly. And we like underwriting Bitcoin infrastructure risk much more than trying to pick a consumer technology that, say, uses BSV, because, today we feel like there's basically, none of the funds in the space, I think, really understand Bitcoin and blockchain and where the value lies. And that's why so much capital is getting misallocated. So for any companies that involve really understanding Bitcoin, we think we're going to have a much bigger edge relative to the market in evaluating that. And it's also just a less risky investment because, you take a company that wants to build on Bitcoin, they're almost today will have to use at least one of our portfolio companies to do so, unless they want to kind of do a ton of coding development and research themselves. So as long as people start using the technology of Bitcoin to do things for their business and have new business models that weren't possible beforehand, our kind of investors win. And while I think BSV is a great investment today at a roughly $3.5 billion market cap, I think investing in the top companies at $5, $7, $8 million valuations has a much better expected value over the long term.
Right. Why don't you tell us a little bit about how you see the next few years shaking out? Because there's no doubt this has been just a tidal wave of money pouring into the space. There's no doubt that there'll probably be some bad actors in there and that there'll be some people disappointed. But hopefully at the end of the day, that if for those who believe in this technology, we're going to wake up and it's going to be kind of like there will be an Amazon that even though in the dot-com bubble there was lots of bad companies in there, eventually Amazon came out of it. How do you see the next few years playing out in this whole kind of crypto square environment?
Yeah, so in the next year or two, I have very high conviction that there's going to be at least a few companies that are using Bitcoin in some capacity that get incredible amount of adoption. So this could be, say, like a consumer startup that is using Bitcoin that gets a lot of users, or it could be something like Visa deciding to process a lot of USDC transactions on Bitcoin. Okay. And I'm actually more bullish on kind of the medium-sized enterprise side of things than I am on like the startup or large enterprise, at least in the near term. And I think that to me is the most likely catalyst for the market starting to both look at BSV, speculate on BSV, the asset, and for more capital to kind of pile into the venture space and start to give our firm more serious competition in terms of investing in BSV startups. In terms of kind of the Craig Wright thing, I think there's probably about a 50-50 chance within a year or two, most of the market starts to understand that this guy did create Bitcoin. I think those that are in the crypto community and argue so vehemently against it will not be first movers. They'll be some of the last movers. But I think as more, institutional investors and, more patient capital starts to get into the space and actually do their own diligence, I think they'll, start to have a more level-headed view around that. And I think that presents some, good upside for BSV when that occurs, given the creator of Bitcoin has kind of been renouncing and actually mounting series of lawsuits against these other versions of Bitcoin and kind of only supporting the BSV version. In terms of the broader crypto space, I don't really have as high conviction there. I think the BTC, music could continue going on for a number of years, regardless of BSV's success. Although I think if, Craig Wright is understood to be Satoshi, I think it's unlikely that BTC still has any type of meaningful, medium or long-term upside at all, as people will start to look and be like, oh, maybe I'll use the version of Bitcoin that the creator likes and is, thousands of times faster and cheaper. And perhaps at that time, tens of thousands of times or hundreds of thousands of times as BSV continues to scale and grow. But, it's timing bubbles is one of the hardest, if not hardest things to do in markets and investing. And I certainly don't think I'm going to have any large edge in determining that. And I think the BTC bet could, win out. And I think, best of luck to those wanting to make that bet. I just, it kind of pains me to see all of this capital go into crypto and blockchain, go into these speculative assets and just kind of make those that bought these assets early wealthier, as opposed to funneling capital into productive entrepreneurs and companies that could actually, make the world a better place.
So Zach, you know what? I think that's a great place to leave it. But before I do, you mentioned that you studied music in school with your partner. What did you study? Like, were you like classical trained, or were you guys like at Berkeley and Boston? What were you guys doing?
We were at Oberlin Conservatory in Ohio.
Okay.
And Jack's a pianist. I'm a trumpet player. I got a degree in composition, so I love kind of arranging for medium and like large ensembles like jazz big bands. And I don't play as much music as I used to, but still love it. And Jack and I, still enjoy playing with one another and performing here and then.
Well, that's terrific. So where can they learn more about you and Jack, your firm, and contact you if they want to talk a little bit more about BSV? For sure. So at unboundedcapital.com, we have, kind of contact form, a ton of resources on BSV. We've written an ebook that kind of describes, the state of the crypto and blockchain space as we see it, as we've had a lot of conversations where, as you can tell in this short one we've had today, Kevin, there's a lot to unpack, and it's going to be an incredible movie when it comes out. But for those that are looking to kind of understand blockchain and crypto from a place of first principles and understand kind of the differing assumptions between the crypto mainstream and where we sit at Unbounded Capital, I recommend kind of our ebook there. We have videos, we have articles, we have a podcast called Unbounded Conversations you could find in your favorite podcast player or on YouTube. And yeah, feel free to reach out. And Kevin, thanks for having me on today. Oh, it's a pleasure having you. Thanks, Zach. Are you guys there?
Yeah. You have to pitch us into talking charts.
Okay, sorry. I'm feeling kind of woozy or something. Okay. Let's go. Patrick, time for talking charts. What is the magical mystery tour going to look like?
Well, listen, first of all, we always go through our top three. So last week, we were asking the big question as to whether or not the Tesla and Bitcoin tops were in. And, well, you know what? It certainly was a deep sell-off, but the jury's still out a little bit. Like, I mean, there was a big reversal today on the Bitcoin. I mean, so far, we definitely have begun some form of a correction. And often corrections will just do like some mean reverting retracements, and there's always a chance that the bulls will just grab this and drag you for another full bull run. And so what I'm watching for is whether it has failed rallies. I mean, the bulls really need to take this north of 36,000 to really kind of shift the price action back in their favor. Any of these failed rallies that keep rolling over, that might be it for Bitcoin. But what's interesting is Tesla. It's been consolidating, but it hasn't been selling. Right, and so this consolidation, often technicians will view that as like a horizontal triangle or some other consolidation pattern that could be a continuation pattern. So it is way too premature to already be calling the end of Tesla. So we were looking for the top, maybe Bitcoin, but it's too early on Tesla. Any thoughts?
Well, I do have one thought, Patrick. So we're not calling the top on the Bitcoin yet, but there is a very famous Bitcoin bull that has said that the top is in for this year. Do you know who I'm talking about?
No.
Scott Minerd from Guggenheim.
Really?
So he was a very big Bitcoin bull. He came out and said the top's in. We're going to 20,000. And all I can say is that you're not allowed to leave a cult. Like if you think about it, Scientologists, they don't bother you and I. But the people that were in the cult that leave, that's a problem. So I feel bad for Scott.
Is he going to take it? He's going to take the flak?
He's going to take the flak. You're not allowed to leave, and you're not allowed to say it'll go down. You know, we saw even, Bitcoin bull Lyn Alden. She says that Ethereum's just not says something just a tiny little bit, not bullish, and she gets in trouble. It's a cult. So I feel bad for him. That's all I'm going to say.
Number two, we were talking about the big wave of central bank meetings, and we'll talk about the FOMC shortly. But any thoughts on how things played out?
Well, I guess Canada was somewhat hawkish, and then even Europe was slightly hawkish in terms of they talked a little bit about tapering. More and more, as we've kind of said last week, these are non-events. The central banks aren't running the show. It's all about fiscal.
Right, and number one last week was the post-OPEX and inauguration volatility. Will it return? And we were trying to be agnostic as to which direction it would be in terms of just whether things would start to be more volatile once things get unpinned, and it really does feel like we had a pretty big bull breakout on the upside in the middle of the week, right? And I think the volatility is back. Well, and it's going to be both directions. There's room for the S&P still to make it to 3,900 plus on the and maybe even last another week or two. But I think volatility in both directions is here, and I think that it started this week and it's going to continue. Any thoughts on?
From your lips to God's ears.
Okay.
That's all I'm going to say.
That's all right. So the top three things this week, I wanted to start with lumber, which is going limit up, and the home builders, which on the tailwind of that seem to have been breaking out. And I was asked after that big consolidation, I was asking whether or not this is the beginning of another leg higher in both lumber and the home builders. So here I specifically tuned in on the March contract, because when you go to the continuous contract on lumber, it looks like a big gap lower when they did the roll. But we have a limit up day today. Like you see that little dash up here?
Yep.
We're all the way up at 796 up here. And so there was this flagging formation, very clear breakout, going higher, and the home builders are loving it. And so I'm just going to use, let's say, Lennar broke out in a big way. Toll Brothers.
I think you got it backwards there, Patrick.
Oh, you think it's the home builders that led lumber up?
Yeah. I don't think the home builders actually like it when lumber goes limit up.
Well, they don't like it, but it's an indication of demand, is it not?
That's correct. But I'm just saying that the home builders are driving the lumber, and the home builders are on fire.
Well, I think that they broke out at the exact same time. It was,
Oh, they did.
3
I
days?
agree. I'm not trying to give you too much hard time, but
Yeah,
I will
but you
give
are.
I will
But you
give
are.
you. I will give you a hard time about. I think you were bearish on these things for a long time.
Oh, yeah. There was like a time way back when I had to learn a lesson or two, and
It's okay.
anyway.
I've learned a lot of lessons in my day too, and I got a lot of things wrong.
But anyway, they've definitely broken out. But because we brought it up, it probably is going to. We're
gonna
probably
prairie dog.
goochering. Yeah, we're going to goocher it somehow. But anyway, lumber's coming up along its previous highs. It's going to be in a really interesting level because, I mean, if it breaks out to higher highs, this thing could go on another little rip to the upside. Anyway, number 2 was, will there be new leadership in the market? So one of the things that since that November 9th vaccine announcement, we saw that rotation. And while the stock markets have been structurally doing very well, it really has been the small caps, like this is the Russell, that has just been on fire. Right, and it's a lot of those commodity-driven sectors. All the cyclicals have been doing very well, and during that whole time, a lot of the FANG stocks. I'm just going to pick on Apple just because it's one of the larger ones. They've been they haven't been going down. But that's not where the money's been going, right? Like they haven't been where there's been a bit of rotation there, and yet in the last couple of days we saw those FANG stocks all breaking out.
I think it was started with Netflix, don't you think?
Yeah, it started with Netflix. So Netflix did this big earnings gap higher, and Google joined the party, but it wasn't earnings on Google. But you can see that bull breakout on Google. But all of them, like Microsoft, started to break to the top end of its range. Amazon, after being in the gutter for a while, suddenly upticked. The interesting question here, after all of these have been very quiet for a half a year, are we going to see some sort of a rotation here? It'll be interesting. Any thoughts on it?
Well, one of the thoughts that I have is we've had some bad news on the virus front and the vaccine front. I wonder if it's a return to the stay-at-home trade. Something to think about. I'm not sure. I'm not saying it is. I'm just saying that maybe that was the knee-jerk reaction.
Well, the interesting part is that wouldn't it be, I'm just hypothesizing, I'm not even forecasting this, but wouldn't it be interesting if we started to see active selling in a lot of those kind of bubbly stocks, but the indices didn't go down because these FANG stocks all have one more leg that lasts a couple more weeks to the upside with a big move. And we're seeing the S&P and NASDAQ all working higher while a lot of those bubble stocks already start to sell. Wouldn't that be something?
Yeah, because those aren't even in the index yet. They're all SPACs.
Well, that's what I mean. So it's like a stealth thing that's happening under the hood. You have to literally be looking for it to see it, right?
There you go.
Yeah,
I like it.
It's an idea. Do you think it's a reasonable chance?
I think it's a reasonable chance until we talked about it. Okay, number 1, what do we got?
All right. So FOMC minutes and conference is coming up. I mean, hey, listen, this is now, do you think, it seems like there's all sorts of new things that are said once Biden is involved versus Trump. Do you think Powell somehow dynamically changes his tune?
No. Nothing's changing. I'm going to take the other side of that. Nothing's changing. All these conspiracy theories that the Fed was doing this because of Trump and stuff, call them bullshit on that.
All right.
Anyways, that's me.
Okay.
Feel free to disagree. That's what makes a market, but no. But it is something to watch. A lot of times this is a turning point. You get that kind of the FOMC drift. Don't forget about the FOMC drift. It starts the day before, and then the day of it moves up, and the high is often kind of that right after the announcement.
Right. So I want to just look at a couple of other little charts that I thought might be worthwhile. The first thing I wanted to just touch on, so this is the Barclays ETN for the commodity index. And obviously, the commodities have just been on fire. right? And it's oils kind of joined the party, but it really, whether it's the grains or lumber or copper or iron ore or lithium, like rare earths, everything's been just ripping, right? And but yet we got a little bit of a reversal, and it's coming up along those 2019, 2020 highs. And the question I have is like, has the reflation trade run a little too hot? And are we've been sort of overdue for it to pause. So I remain a commodity bull, and and a lot of the major trends that have been in place can stay in place for a while forward. But as you know, Kev, things don't all go in straight lines. And when something kind of overshoots, it backfills and mean reverts a bit. And do you think, what's your opinion? Do you think that this turn that you see here could have been the beginning of these commodities all backfilling and taking a break?
I'm scared to kind of agree with you, but it definitely feels that it's a consensus trade now. The trouble is all these trades are all the same right now, Patrick.
It's all one big trade against the dollar.
It's all one, dollar, EV trade,
yields,
bonds, all these things are all one and the same. So the real question is,
do you think it's the dollar though that will be the trigger that in the end creates that mean reversion? Like, is it like, for instance, the dollar? While I don't want to say it has done anything bullish, but it has stopped going down for the last 2 months.
So I don't think that the dollar causes it. I think the dollar rally is a reflection of the lack of liquidity in the system. So everyone thinks like the dollar causes it. I don't think the dollar causes it. The dollar is the symptom. The actual cause is because of withdrawal of liquidity that caused less dollars are created and therefore causes the dollar to rally. And then it becomes a self-fulfilling feedback loop. So it appears like the dollars, caused it, but really it was it was the liquidity. And that's the one thing we don't understand about liquidity. Like, there's all sorts of crazy stuff that goes on. Like, I'm convinced that Chinese liquidity means way more than any of us realize. That they can go do stuff that we just don't know what's happening. And that we all think that we understand, there's this and this and this. And the reality is that somewhere along the way, there's some program kicks in and liquidity is withdrawn. And we get, 2 months of selling. And that's what's going to happen, I think. So there'll be somewhere along the way, for whatever reason, with liquidity will be withdrawn at some place somewhere in the world. And that will cause the inevitable correction that we're happening, and people will assign all sorts of reasons why it occurred. But the reality is it was just because liquidity got, withdrawn.
Yeah.
Anyways, that's my two. No, the real question is, what do you watch as the canary in the coal mine? What are the kind of signals that it's about to come that you should be watching? And
obviously, I'm not. I personally think the signal comes from the dollar. Me and you have a different opinion. I honestly think that,
but are you saying that the dollar causes it, or are you just saying that the dollar?
I think a dollar squeeze kicks in at some point, and when it does, it scares everyone.
But why does the dollar squeeze?
So just liquidity. It's just such a crowded trade. It doesn't have to have a reason. The media will find a reason why it's happening after the fact.
Yeah.
But I think that it's such a crowded trade. It stopped going down. All it just needs to do is have one day where everyone just freaks, and then the thing just catches its own momentum. I don't know. I personally think that that's a legitimate chance on that, and that's what I'm watching.
So you'd watch the dollar first. So you think the dollar gives you the signal first? I'm not going to disagree. I think the dollar is sensitive to liquidity and therefore will rally very quickly. I think commodities are another.
But what is there any one more dominant thing that would almost immediately reverberate shockwaves into every other asset class? The dollar is going to be the one. Like, if you want a true catalyst for creating that shift, I personally think the dollar fits the bill perfectly.
Okay, not disagreeing.
All right.
I won't
So
argue.
I want to leave with just talking about the emerging markets, which have I know Lyn talked about it with us, but man, they've seemed to be going almost into like they're accelerating into the rise. Like it feels almost like I don't want to say a bubble, but it's like they are just like it's the emerging markets are just getting steeper and steeper to the upside. On this advance, and some of the countries that have had the biggest move, like this is India, Bombay. Like look at the Sensex, the way it ran since November. Right, just a huge punch to the upside. And then you take a look at like how some of the other markets like the China A50 has been doing to the upside, or even the Kospi, the South Korean index. Like these markets have all just been on fire. And I think that it's all part of that one big trade. It is, and I still think that the emerging markets are a great place to be in the longer term. But this has all gotten a little too crazy too quickly. Something's going to cause a mean reversion on all these things. I know. What's your thought on these emerging markets?
I have trouble buying anything, Patrick. I try to marry everything I buy up now, like with a short on the other side, because I agree. It is like it's tough to get bullish on the Kospi when it's rallied this much. So I just find things to be bullish on a relative basis, and I still like all these things on a relative basis and think that they'll probably do better. Like I look at I'm worried about the vaccine. I'm worried about this new variant, and I think that Asia is going to handle it a lot better than North America and Europe. So if anything, I think you buy the Korea, the Japans of the world, and even maybe the China, I'm not sure, against all those other, developed countries.
I'll sell that to you. I don't think that they're going to be able to hold up better. They're starting from a much higher level. I'm not saying that they're going to underperform, but I don't think that they're going to be a safe haven. I think that everything's going to get hammered equally during the correction. But anyway. All right, so it's time to move on.
Okay. This week in trading history, what do you have for us, Patrick?
Well, you know what? We've in the past talked about the Hunt brothers, but let's talk about that silver run back. It was January 21st of 1980. The silver prices reached their all-time high of $52.50 per ounce. Now, this chart doesn't show it that high because I do believe that the peak in the London gold markets for silver was actually $49.45, and that one occurred a few days earlier on January 18th, but that was the peak price. So on an inflation-adjusted basis, Kev, that's the equivalent of silver today hitting $166 an ounce.
Although in this market, it just feels like GameStop.
Exactly. And so, but what's interesting is the story. So in an attempt to slow the rise of silver prices, the COMEX does something extraordinary. It would ban all silver orders except for liquidation orders. So let's dive a little deeper into this. Okay, so in New York's Commodities Exchange, struggling to prevent a break down in silver futures markets, like in terms of the clearing and everything, ordered trading in the metal restricted to liquidation of contracts only. So the COMEX also sharply increased margins on silver and gold future contracts at the time. The board acted from the threat of a corner or a squeeze. They stated that the biggest threat to the world's leading metals exchange comes from wealthy international silver holders that have been buying large amounts of futures on margin, which we know today was specifically targeting those Hunt brothers. And if any of our listeners want to learn more about the Hunt Brothers Silver Corner, just Google it. It's such a great story. But anyway, let's just talk about what happened in the price, which was that the price then plummeted down to $34. So from $52 to $34 in one day, and would continue to fall all the way to March to the big event, which was the notable day which we covered before in the past, which was Silver Thursday. It was March 27th of 1980 when silver fell all the way down to $10 in that fluid motion. And so this just goes to show it's not just EV stocks and Bitcoin that go through these types of corrections. This is a market event. This is this is a human nature and the way bubbles work. We run these things up because everyone's greedy. Everyone wants a piece of the action, and the mean reversion on the other side is always nasty. And it doesn't matter what it is, if it's a stock or if it's gold or silver or if it's a cryptocurrency. It always happens the same way, and I don't think anything has changed.
Except this time is different, Patrick. This time EVs and cryptos are going to change the world, so they won't be subject to this.
Okay, maybe you're right.
If you believe, for those who don't think I'm being serious, send your hate mail to Patrick. Anyways, do you have any more to tell us about this silver coin?
No. It's time to move on, bud.
Okay, I'm sorry. I didn't mean to take the air out of your...
No, you know what? That was awesome. You just ended it on now my email is going to be bombarded with hate mail. Thank you. I appreciate
time for
it.
no stupid questions. And Lena, get on and save us.
Hello.
Hello.
Lena.
All right, so first question of the week. Hi, Patrick and Kevin. Quite often, I hear commentators talking about a strong move as X sigma, where X can be 1, 2, or 3, and where sigma refers to the standard deviation for a day's price move. I've never been able to find the standard deviation of a stock, index, or ETF listed as an accessible piece of information. I have found that you can back into it approximately by taking the annualized historical volatility percentage and dividing that by 16. But coming up with the historical volatility for an issue is sometimes a problem. Like Patrick, I use a TradingView chart service. Is there some way to come up with the value for sigma using TradingView?
Okay, so I'm going to grab this one. It's Kev here.
All right.
So yes, if you want to sound cool, you say that's a 4 sigma move or whatever. That's what all the quants say. I do want to tell the story of a good buddy of mine that always used to laugh. And he says, like whenever someone says, oh, it's a 6 sigma move, you got to take the other side, right? And he says, you know what the trouble about 6 sigma moves are? They go to 10. They go to 10 before they turn around. So be careful about this, because often what it basically is saying is how far outside of the normal move is this, okay? And they use it by calculating the standard deviation. Now, this listener did rightfully recognize that the way to get a standard deviation in terms of percentage is to divide it by 16. Okay, that is actually the way to do it. Yeah, to get if you take the volatility of a thing, and then if you want to turn it into a daily move, you divide it by 16. Now, the actual way to do it is by the square root of 252, which is the trading number of trading days. Okay, and that will get you the percentage of one standard deviations. So that if you know that the standard deviation of the S&P is 0.5%, and it ends up being a 1.5% move, you can say that's a 3 sigma move. Okay, and that's the crux of it. Now, one of the things that this listener is asking is, with TradingView, can I figure this out so that I can basically sound cool by talking about all these different sigma moves? There is no way to do it easily, but I did go and do a little researching. And on TradingView, they have something called scripts. So if you go to the scripts tab, and then you go to volatility, and then you go historical volatility, you will see that there's an indicator and strategies, and you'll see that there'll be something called indices, sectors, sigma spikes. And if you go there, you should be able to put in that code, and you will be able to sound like all the cool kids and talk about all the different sigma moves.
You got to sound like a cool quant.
You got to sound like a cool quant. Okay, well, anyways, I hope that helped.
All right. Lena.
Second question. This is the same listener from last week that was talking about brandy and Coke.
Oh,
okay.
Yeah, it's the same listener. I'm sitting in the spa drinking a perfectly poured brandy and Coke, listening to Patrick's soothing voice politely asking Eric scripted questions. What a life. I've just read reminiscences.
No, wait.
of stock
Patrick
operator.
scripts those?
No.
Those are scripted? I had no idea.
I've just read Reminiscence of a Stock Operator for the first time. I can't shake the thought of how many lessons can be learned from this book. The demons within that we face as traders today are the same demons Larry had to fight over 100 years ago. The lessons Larry learned are the lessons we can hope to learn as traders today. The question on my mind is, if markets supposedly change and evolve over time, but the speculator doesn't change, does the market really change? The market is made up of investors, traders, and bankers making decisions on securities, commodities, bonds, and currencies. So perhaps really the market doesn't change. With the current monetary policies and potential fiscal policies to come, there's plenty of people out there that think the markets have changed for good, and assets will only head up. But is this really the case if the speculators haven't changed? Can Janet and Jerome really change the game? Or are they just influencing the game for now, and eventually the mind of the speculators will change along with the market direction?
All right. Can I take a stab at this?
Yeah,
Kev?
you go first. I got a lot of things to say, but I'm taking notes here.
Well, I so long as the markets are free trading, and so long as human nature contains fear and greed, then the markets have an underpinning that will never change. And until people start to learn from history, which will never happen, then it's doomed to repeat itself. And I think that even though Jerome and Janet could perpetuate the bubble, all they're doing is allowing greed to take the market to levels that are much higher than they should be. And down the road, it will only lead to more problems in not allowing the markets to behave in their normal fashion. And so I don't think they've changed. It's just what happens, like even now when everyone's saying with the liquidity in the Fed, and therefore it won't happen. It's too short-term thinking. Over a long enough time frame, these things always happen, and this time will be no different. That's my 2 cents.
Okay, so first of all, you kind of made it sound like there's something new happening with Jerome and Janet, and that the markets, there's some new kind of element or this is changing the whole world. The world never changes. Markets are markets. It's always the same. There's nothing new. It's all just the same story over and over again. And for those who read history, they just have to be condemned to watch history repeat itself over and over again. And like when we think about the investors today, the young people are making the same mistakes that we, Patrick, you and I made as young 20-odd-year-olds in the 1999 bubble. Right. But more importantly, I was just thinking about Larry, because this listener, he talks about Larry Livingstone. And that's such a great name, and I don't think enough people are called Larian anymore. And no, seriously. And I was just actually thinking about it, and you know what? It's a great name for a person, but it's even a better name for a dog. Like if you just think about it, you're sitting there.
Oh my God! You just offended all the Larrys that listen to the show.
No, listen, Kevin is like I name. Well, anyways, Larry is a great name for dog because it sounds like a person. So my next dog I might call Larry Livingstone. Anyways, thanks for writing in, listener. And I just insulted all the Larrys. I didn't mean to. I love the name.
I'm not going to say anything. Let's quickly go on.
You know what? Actually, one second before I say anything, I actually wanted to name one of my daughters Molly, and I wasn't allowed to. My wife got told I wasn't allowed to do that, and so I named our dog Molly. So that shows you how much I like a name. I'll call my dog the name I like.
Because you love those dogs, right? Because you're a big dog person.
Anyways, okay, let's go before I get into any more trouble.
Yeah, exactly.
Okay, last question for this week. Hey guys, the more I learn about MMT, the harder it is for me to take the FinTwit deficit doomsdayers seriously. I'm trying to keep an open mind as I used to worry a lot about fiscal deficits and the quote-unquote wasting of taxpayers' money. But the more I read, the more I think these MMTers have it right. Am I being bamboozled by the MMT crowd? Economic theory doesn't exactly have a great track record. Would love to hear both of your thoughts.
Oh, God, they want both of our thoughts.
Yeah,
so I'll start.
Yeah, and so everyone sit down, grab a cup of coffee, because he's going to preach. So here comes the 10-minute preach.
I will not preach. I will say this. I completely understand how this listener feels. when I started reading it, it was mind-opening for me. And I'm actually going to take this moment, though, to talk about the potential problems with it. Because to me, he's obviously figured out the positives to it. So let's talk about the negatives to it. There is no doubt that taken too far, MMT could cause problems. And one of the big pushbacks you often hear is that if the government starts spending, it's tough for them to stop spending. And yes, I agree with you there. But I also think if the government starts lowering rates, it's difficult for them to raise rates. It happens the same way. So I'm kind of torn because I agree with this listener in that he's realized that these MMT guys are onto something in terms of the market has pushed too far down the road of monetarism, and in doing so, they've created just problems that are huge, and we have to go back the other way. It's not like it's going to solve all of our issues. It's not like MMT is going to come and the world's going to be nothing but rainbows and unicorns. Like, there's not a chance. And I know a lot of the MMT people will say that it will, but I don't buy that. But yet, it is probably still the best policy to go down this fiscal road until we start to see inflation. And eventually, we are going to see inflation, and then that's going to be the real kind of point where the rubber hits the road. And the question will be whether we have the guts to pull back on the fiscal levers at that point. But I must say, you are not being bamboozled. There is kind of a little bit of a free lunch. It's not really a free lunch. It's just that the other policy was so bad, trying to fix things with monetarism over and over again to the point where you're actually in Europe, you have negative rates. It's just like the stupidest, bloody thing I've ever seen. And the fact that people will look me in the eye and say, no, that's a great policy, and then have problems with the government actually spending and investing in our society by going and doing productive things, it just boggles my mind. So, Patrick, tell me why I'm wrong.
No, I don't want to say wrong. What I just I want to simplify it much more, right? And I think that the simplification is far too many people that are the doomsdayers look at government spending and debt and things like that, like if they were balancing their family budget, like a home, and you know that too much debt is bad, and that we have to live within our means, and all these different types of things that make sense on an individual basis, but that's just not how governments work, and this is where I think the MMT people have contributed to that in helping people understand that it's different, that governments function different, and there are different ways to solve problems beyond just being, fiscally conservative with things. And that's I'm going to just leave it at that.
No, Patrick, that's awesome. I'm so proud of you, buddy.
Oh, what the?
I'm so proud of you. Think about like a year ago.
Thanks, Dad. Dad.
You would have never said that a year ago. A year ago, you would have said, no, you got to balance the budget, blah, blah, blah. Look at you. Changing. I'm proud of you.
All right. Oh my God. Let's quickly switch up. Elaine, Lena, please jump in here and take this over.
If you have any questions for Kevin and Patrick, please submit your questions to nostupidquestions@markethuddle.com.
And when you submit the questions, it has to include one of the symptoms at the beginning, side effects at the beginning.
Nah, don't make them do that. The other, they can do.
Okay. Anyway, all right. Let's go on. So, Kev, skin in the game.
So I lost again.
Woohoo!
Nice. Well, I'm proud of you. Proud of you twice, son. Okay. So what did I lose on? Oh yeah, because you beat me on the 10-year. I thought
Yield.
I could trick you.
That was a ridiculous thing. 85 basis points can happen, but not in a week. Well, at least I didn't think it was a probable.
Well, not
event,
only that,
right?
listen, the week was as boring as anything. So I chose the wrong week to try it. Even if I had done 100 basis points, I would have still lost. So it didn't matter. It was a complete dud. I blew it.
Lena, did we do a pitcher or a burger?
This one was
remember?
a pitcher.
Oh man, our listeners are gonna love how much beer we're gonna be buying for them when we have the Market Huddle meetup.
So I
All right,
lost
anyway,
again. So I will be buying that pitcher. And so what do you have for me?
Well, why don't you go through the rules quickly?
Okay, so let me grab them. I don't actually have them. There we go. Skin in the Game is a weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Every week, one of us presents a wager, and the other guy chooses which side of the bet he wants. Every wager needs to settle by the next episode, and the currency for the wagers is as follows: a Duke and Dirk, which is a crisp $1 American dollar bill, a pint of beer, a burger bet, a pitcher, a case of beer, which in Canada is known as a 2-4, a bottle of wine with a $100 limit, and a steak dinner. I'm still waiting for the steak dinner. The winner of the bet is obligated to create a new bet for the following week, and all wagers settle in full, and there will be no netting of positions.
You know, Kev, that sounded awfully scripted.
It did. Well, you wrote it for me, Patrick.
All right. Okay, so it's time for the bet, buddy. All right. So, okay. So here we go. I want to do something that's a little bit out of things that me and you normally
Trade?
kind of. Normally
watch?
bet on.
Okay.
So, well, I mean, Netflix had its earnings and it gapped higher.
Don't trade that one.
And exactly, and I haven't traded Netflix for a while, but I just think it's going to be an interesting question as to whether this gap higher was the beginning of a new uptrend, or whether this is like a big prairie dog and this thing is going to just head lower. And so I want to give you the opportunity to make the call on this. I am going to do one touch 535.
Oh, you bugger.
Down here.
So what percentage is that? Like, what is that? So it has to fill... It doesn't even have to fill the gap. Oh, no, I guess it does have to fill the gap.
It doesn't. No, it's going to be. It's a 5% drop, basically, roughly.
Oh, you bugger. I don't know, bud. One touch?
One touch. One touch.
You know what? My bearishness is coming out. I'm taking it.
You're taking the touch.
I'm going to do the one touch.
All right. Where do you want to start the betting?
I'll start at a burger, man. I'm hungry.
I like the burger.
Okay.
I'll take the burger bet. All right, done. Burger bet, Netflix, one touch, 535.
I like it.
$535 even.
Okay.
To the penny. All right.
Thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow at the Market Huddle. We're on Twitter there every day. Actually, Lena's on there every day. She gets tired of talking to Patrick and I and her new puppy, so make sure you give her a shout out. You can listen to the Market Huddle on all the networks: Google Podcasts, Podbean, Spotify, Android Play, iTunes, and YouTube. A lot of people watch on YouTube to see all of our charts and visuals. And while you're there, please like and subscribe to get our latest content. Smash the like button, I've heard is what the kids say. And please, if you could, rate and review us on iTunes. It's a dumb game, but it makes a difference to Apple's algorithms, and it helps us out immensely. Patrick, I'm having some trouble with this beer.
Yeah,
Where can they find you, buddy?
You can find me on Twitter at Patrick Ceresna, and you can also find me at bigpicturetrading.com. Kev, where can they find you?
You can follow me on Twitter at Kevin Muir, or my newsletter at themacrotourist.com. And listen, we can never have too many friends. Bear market, bull market, we're just happy to spend some time together on this crazy ride. So thanks for tuning in, and now stick around for the after show.
Lena, hop on.
So, Lena, I've had a couple of these. They are stubbies, but they go down smooth.
Oh, they're great, actually.
Yeah. So, Belgian Golden Ale. I just want to give another big shout out to 50 Pips. He actually writes a blog. He does a lot of currency stuff. I like him. He's a good guy, even though he insisted I put it in a glass. That's my only real complaint about him. So go check him out at 50 Pips on the Twitter, and he's got a blog, 50onmarkets.com/blog. Thank you very much. Very kind of you, sir.
Thank you.
I'm going to give it a solid 8.8.
Ooh.
Yeah,
wow,
Belgian
that's
Golden
actually
Ale.
higher
Like it.
than the score I was going to give it. I was going to give
Oh,
it
what are you giving it?
8.6.
A 6?
8.6. 8.6.
Oh, 8.6. Okay.
You guys have stopped asking me what I rate my beer.
Well, because you're sitting in Barbados
same
while
beer.
we're in cold Toronto, and, you know,
Oh, there's a
I'm
pic-
drinking
there's
the
a
Banks
picture-
beer, and every week it's the same 7.5. So I guess it's just repeating myself. Right?
Yeah, 7.5.
We have a picture of his entourage, right? And
Yes, we actually should
Oh
pull
my
that up.
God. You know what? The funny part was that Kev, you came up with this picture, and then Lena's like, I don't know. It's
Lena was the one, we have to be honest. Patrick and I put it on there. Didn't think twice about it. And then
don't
Lena
involve
noticed-
me. Don't involve me, Patrick and I.
Come on, we didn't think
Like,
twice about it. So for those who are listening to this, it's a bunch of guys on the beach. It looks like they might be celebrating St. Patrick's Day.
I
Because
don't
they're all
know.
wearing green things. But anyways,
Or
they're
there's-
wearing
or
like the
Christmas-
terrible Borat
Mankini?
bikini. What is it called?
I don't know. Is it called a mankini?
Mankini. We're going with it. They're all wearing mankinis. It is very awkward looking. It just kind of gives you the heebie-jeebies even just looking at it. But the one guy on the left that's wearing a wig
He also
is
looks like he's
wearing
dressed
like a Jane of the
Tarzan.
Jungle kind of outfit. And in his jungle part is a little bit extra. And Lena's like, hey, guys, I don't think that's going to work for the YouTube censors. And I looked and I was like, oh, she's right. There's a little bit extra there. So Patrick had to cover it up with a big green star.
Oh my God.
Yeah, so I can just picture you guys doing that. That does look like your crew.
Oh yeah, I'm sure that does. Yeah.
Okay, Lena, everyone's
Oh my
dying
God.
to
Anyway.
find out how the pups are doing.
Oh, they're doing great. It's you know what? After last week's recording, my dog gave birth like right before midnight on Friday, on the 15th.
Okay.
So
Were you done the show by then?
yeah, I was actually done. She couldn't have done it at a better time.
She
basically.
waited. She
Yeah.
knew.
Yeah.
She's a very thoughtful dog.
She was kind of getting ready for labor all day, and we were kind of worried that she was going to start, giving birth while we were busy or whatever. But she waited, and then as soon as Luke and I both, went to spend some time with her, that's when it started. So
Nice.
4
So did
beautiful
you watch
puppies.
it?
Yeah, I watched the whole thing. It was quite an experience. It was very interesting, but it's very endearing to watch her be a mom to these puppies.
So how many puppies did you have, and have you named them? And have you thought about Larry?
No, not Larry yet, but maybe I'll consider it. But she had 4 puppies, so they're schnoodle puppies, miniature
Okay.
schnoodles, and we have 1 male and 3 female dogs. And,
Okay, who's getting the mail?
we don't know yet. There's a bit of a bidding war going on from a few of our friends.
Oh, I thought you weren't supposed to sell them.
We're not selling them. If anything, they're going to be just
We're giving them.
away to our friends.
For some goods.
And yeah, we've named them, but I feel like it's been a bit of a mistake because I feel like I'm going to get attached and I'm not going to be able to let them go.
Oh yeah, you never name the merchandise.
Yeah. So. But they're gaining weight every day. There's changes every single day, which has really been amazing to watch. So
That's
yeah.
good. And so what did you name them? Give us the names.
Okay, so there's two black ones that are called Shadow and what did we name the other one? Shadow and Storm. And then
Okay.
we have another female dog
Badass
that's
names.
kind of spotted, looks more of a schnauzer sort of colors,
Yeah.
and we named her Pepper.
Okay.
And the male dog is actually the same color as my dog, which is kind of like that golden color, and we
Yeah.
named him Simba from the Lion
I like that. So if,
All over the map.
you know
all
what?
over the map.
No, but Simba's a good name. Like if you weren't going to name him Larry, like then Simba is good. I like it. That's a good name. And you know what you
That's
should
funny.
do? You should take them out onto the living room, get the music ready,
Once he has
pick
his
him
eyes
up,
open.
and put him and show him his territory. Whatever the song is or whatever. You should do it. You should.
Why
tape
don't
it.
you sing it for us? Sing it for us
I
right now.
can't
You gotta
sing.
come up
I'm
here.
a terrible singer. I'm a terrible singer. Well, that's great,
Oh
Lena.
my
I'm
God.
glad it's going so well. That's awesome.
Yeah.
Yeah, they're
So did you
beautiful.
even have to get the vet or no?
So we had visited the vet before she gave birth, and then we had been in contact with the vet just because, like Luke and I've never done this before. We wanted to make sure the puppies were going to be healthy and
Yeah.
that we were doing everything right. So we've been in close contact with the vet, obviously, over the phone and stuff. But yeah, they say, we're doing okay. The mother usually takes care of the puppies on their own for the first couple of weeks, so we're okay for now. And once they start walking around, that's when trouble will ensue.
Oh, so they're not even like, they don't even walk at the beginning.
They can't walk. They basically
They're not like deer.
No, they're moving around kind of like baby seals. Like they can still move around their limbs, but they're literally just kind of pushing. Like,
Dragging.
Yeah, they're like on their tummies and they're kind of pushing with their hind legs, sort of. So they're kind of, they can't walk just yet, and their eyes are not open just yet.
Oh, their eyes aren't even open.
No, not yet.
Oh, I had no idea. So how long does that last?
I think they say it takes about a couple of weeks before they open their eyes. So
Really?
We're kind of watching to
Jinx.
see if they're going to open their eyes soon or not. But I'm sure that's going to be another magical moment.
That's funny.
That's awesome. And how about you, Patrick? How are things in the Barbados? Did the locals find any other ways to rip you off?
No, it's all good. I did go deep sea diving.
Nice. Have you gone
yeah.
before?
No.
So
No, that
you
was
had to
my
get
first
certified
experience.
and stuff, or this is the kind of
Not certified.
This is the
Well,
kind of,
it was like it
place
was a
where you just
1 day
slip them
trip.
an extra 40 and everything's good.
Well, no, because it's not with it's not scuba. It's free diving. Like so, you're like breath hold.
it's okay.
It's breath hold, right? So it was a whole course on how to decompress everything as you're going down all those different meters, holding your breath and everything.
What did you have trouble when you got past the second, Patrick? Second meter? God damn it! The third's really hard.
Oh. No,
How-
dude. Yeah.
how far did you go down,
when I
honestly?
was getting, I went 7 meters.
Oh, that's pretty
and
good.
They were trying to get me to go down 10, but it was just nuts. Once you get down like to that 5, 6, 7 meter mark,
Yeah, there's a
feels
lot
like your
of
head's
pressure.
about to
Yeah.
explode.
Did
Like,
you?
it's-
Do they just give you monster flippers to get you down there?
Oh yeah. Well, but when we're doing the training, they had a rope that you're actually kind of working down, so you can actually control your depth and do all your leveling as you're going, and so it was easier to practice that way. And then we did some free dives around all the cool shipwrecks that they have here.
Nice. And so, did you see any cool fish?
Oh yeah.
See any
There's
sharks?
tons of them. No.
Sharks kind of
No.
freak me out.
Yeah, me too.
Yeah, usually they do. Most people. Can't.
Well, that's not true. If you actually it's like us with bears. Like bears don't freak me out.
Oh, bears
But like,
definitely
so
freak
you
me out.
you meet a kid from Hawaii, they're like sharks. What are you worried about? They leave you alone most of the time. It's that one time they don't leave you alone that bothers me though. But like think about like people freak out about bears. Do you freak out about bears? No.
Have,
right,
you ever,
like-
have you ever seen?
Well,
a bear up
I mean,
close?
if it's a grizzly and
Okay,
you're out in the
grizzly.
wild,
A grizzly.
okay,
is a
like
different-
if it's a little black bear and he's
Yeah.
digging in your garbage, whatever.
yeah,
like,
exactly.
know,
You
it's-
yell at it. You
Yeah.
tell them to get out. Like they're just big
But-
raccoons.
Yeah, exactly. I was about to say, like a black bear is a big raccoon. It's not. It's not the same as a
Don't
grizzly.
worry
or
that
a-
it's
a
350
polar bear.
pounds
You
of pure
say
muscle
that
and can
until-
kill you, but don't worry about that. Everything's fine. But yeah, but like I think that's how people are. And like you go to Hawaii and you talk to people that've grown up there, they'll be like, "Yeah, I see sharks all the time when I'm surfing."
Yeah, I'm sure there's sharks there, but this is mostly like turtle, stingray, and like you got your lionfish and mackerels and all sorts of other cool.
So did you see any
fish.
stingrays?
There are, but I didn't see one.
Stingrays are
No,
pretty
there's
cool.
a-
Actually, when I
Yeah.
was in the Caymans, they have Stingray Bay. I went there and it was awesome. You go to this like sandbar and you hang out, and they just like they're everywhere.
Yeah, but
What did you see? So
that
what was the coolest thing you saw then?
They're just the shipwreck. It was just covered with like tons and tons of fish. It was just such a cool experience swimming, and they're like swimming all around you. It was really cool.
Oh, that's cool. Are you all alone,
But
or
it was-
do you have some boys there still with you?
Oh no, I've got some crew. I got crew.
You got like
It's,
you got Turtle,
and more
you got
importantly, I
Turtle
got-
and Johnny Drama still with you.
Yeah, and but also they introduced me to a whole bunch of locals. So there's a great group of people down here. There's no shortage of.
Oh,
of,
you're getting
people to
familiar with the locals going out. That's why I
That's
haven't
right.
heard from you. Like we had no midweek update. Did you notice that, Lena?
Yep.
Usually he's
Very
bugging me about the
quiet.
midweek update coming up with some content. This one was surprisingly quiet. I was like, oh no, midweek update. What's going on?
A little bit too much rum each night.
That's right. So what do you got planned for the big week then? Anything new?
Who, me?
Yeah. Well, Patrick, Lena's sitting around staring at 4 like blind dogs.
Yeah.
I'm like in my house, just moving from room to room for excitement. You're the only one that's like got anything going on.
And
So
we're
yeah, we
locked
want to know.
down.
I'm doing a little some hardcore. We're gonna go actually like outright camping in the center of the hills of Barbados, right up at the top of the hills. It's hardcore shit. Like I'm scared of shit, but we'll see how.
What
It's
exactly?
the locals. This is the problem: is that the locals come up with, we're going to give you the local Barbados experience. We're going to take you camping. It's like, fuck, that's all I do in Canada. Like, I mean, I want to go on a boat or something. Take me on a yacht or something. Like,
So you're gonna hike up some mountain and sleep in a tent?
Yeah. They got hammocks and shit.
Oh, that's cool.
Like, it's
Oh well, that'll be
yeah.
fun.
Yeah, I'll let you know if I'm alive next week. It'll be
Are you
good.
doing it on the
Eaten
weekend,
alive
or
by
is it doing it
mosquitoes.
during the
Yeah,
week?
it's on Saturday. Saturday.
So what? Not
Sunday.
tomorrow, like a week tomorrow?
No, tomorrow.
Oh, you're going tomorrow? Okay, well there we go.
Tomorrow.
So people, if he's not
the
responding to
storefront.
his Twitter, we know what's happened. The locals killed him.
Oh my God.
They figured that he was worth more. Like they've milked him for everything that he's got. They got him for the 7 days or whatever at $600 a night. Now they're deciding that he's worth he's pretty well milked out. Let's just kill him up in the
The
woods.
final stretch.
Oh my God.
No, but
You're
people
gonna
are
be
All right,
nice.
You're gonna be
that's-
one of those like unsolved mysteries. You know how they make
my
the unsolved
God.
mysteries?
Oh my God. All right, that's enough. That's enough. I'm tapping out. Have a great weekend, everyone.
Have a great weekend. Thanks for tuning in.
All right. Cheers, everyone.